Good morning, everybody. Welcome back to another episode of the Market Open. We are here today, Thursday, February 27th, the day after Nvidia earnings. And it's good earnings. It's not a bad earnings. It was one of those earnings we needed. We really needed it, not only for the sake of Nvidia, but obviously also for the sake of the broader markets, and Nvidia delivered. In my opinion, Nvidia delivered. In fact, I bought 30 shares of Nvidia literally last night after those earnings because of how strong those earnings were. So we got a lot to talk about when it comes to Nvidia. I think they crushed it. We'll talk more about them throughout the entire show, and we'll get different perspectives on what's going on with Nvidia. In terms of the actual pre-markets, I mean, they're up. They're up pretty nicely. Nvidia is up 1.93%. Salesforce was down almost 7%. Now it's only down 3%. Pretty much every other stock is rebounding. You got HIMS up 2%. Robinhood up 5.73% in the pre-markets. Rocket Lab's up 5%. Grab is up 0.5%. Grab closed at 487 yesterday, right now at 490. SMCI down about 2.5%. That's a little surprising given Nvidia did so well, but that one is down. Microsoft's up a little bit. Google's up a little bit. Tesla's up 1.62% after closing at 290 yesterday. Palantir's up 2.68%. I think Nvidia kind of pumped the markets. S&P 500 as well, up about 0.25%. I don't know how sustainable this pump is going to be in regards to what Nvidia produced in the numbers that they put out, but I thought the numbers were amazing. And when we go through the numbers today, I think it's going to become very obvious the AI trade is not really going anywhere. And anyone who says it is going anywhere, it's just you're either looking at the wrong numbers or you don't believe these numbers. And that's okay. But the numbers are the numbers. And they are pretty substantial numbers. And I do think these numbers are not stopping anytime soon. So we're going to talk about Nvidia earnings, and we'll go through that. We had a couple other earnings already in the pre-markets that we'll talk about. Yesterday, we did have Snowflake and Salesforce, which respectively, they both did pretty good. Salesforce is down, Snowflake is up, so we'll talk about those earnings. We had Warner Brothers Discovery this morning, TD this morning, and Papa John's this morning. So nothing too crazy, but we did have a couple other earnings. After the bell today, I will be live. We've got SoundHound, Duolingo, Monster Energy drink, HP, Dell, Archer, I know it's a big one for you guys. TMDX, a lot of people like that one as well. Small cap with, and they basically do organ deliveries. And then Rocket Lab, which is the big one that everyone cares about. I care about them as well now that I own Rocket Lab. So I'll see if Matt Money can join me on that one. I don't think we're going to listen to the Rocket Lab call. I'm sure he'll be doing a stream for the Rocket Lab call. So maybe he joins my stream for a little bit and we cover the earnings, and then everyone can go to his stream for the call. So we'll figure out kind of how we navigate it. But yeah, we have a lot of different earnings today that we'll talk about, along with a bunch of macro data, including Nvidia. So there we go. We got a ton of stuff to get into, and let's see how this potential rebound day goes, because to me, it looks like a pretty damn good green rebound day. It'll be the second rebound day in a row. Hopefully it can hold up, and Nvidia can kind of keep this momentum going the way that it's going right now. We are forcing him to love Rocket Lab, exactly. I mean, dude, I would not have bought Rocket Lab if it was not for you guys. So you guys definitely got me into it, but now we're here. All right, cool. So let's get into Nvidia. Good morning. Thank you, everybody, for being here. Welcome again to the Market Open. If you just subscribed yesterday because you found me from the Nvidia live stream, thank you for being here. We do a Market Open, Market Close every single day, and hopefully we have some fun covering the global capital equity markets. Before we get into it, real quick piece of macro data. We did get some unemployment. 242,000 people filed for unemployment, above the 222,000 expectations. I think this is not necessarily bearish or bullish. I think it's kind of neutral. The bearish case you could make is that more people are getting unemployed, which means the labor market is cooling off. And that means there's going to be less people that have money, disposable income to buy products and services. That's fair. The bull case is that, yeah, we kind of need less spending in the economy. And in order to get less spending in the economy, you need to have a little bit of unemployment for inflation to chill off a little bit. Now, my opinion is you don't need to have that happen, because I think the majority of inflation is shelter, and that will come to fruition in the next 6 months, and inflation will come down naturally. But the perception of that could be that inflation will come down if we are having more jobless claims. I don't think this unemployment data is going to change the perception of the March cut. I think we're not going to get a March cut. I also think we're probably not going to get a May cut. But if this number continues to happen the way it happens, aka 20,000 more people than expected file for unemployment, we will start seeing a trend, and we will have the unemployment rate go up. So far, that hasn't been the trend. These 1 weeks tend to be anomalies, but it could be the trend. This also could be from government workers. There were reports that certain government employees just took the severance package that Elon gave them, and they don't want to work for the government anymore. So could be exaggerated because of those claims as well. But eventually over the next coming weeks, we will see if there's any trend in this data in regards to what happens for jobless claims. Cool. So that's what we got yesterday, or that's what we got this morning from the macro data. We do not have a Fed meeting today. The Fed FOMC meeting is going to be happening in March. We might have some Fed speakers talking today. They're probably not going to be talking live. That's when they talk and we get like reports of what they talked about. But I don't think there's going to be any live meeting. Also, one other quick piece of macro news, and then we'll get into NVIDIA. GDP growth. So the U.S. economy expanded at an annual 2.3% in Q4 of 2024. This was the slowest growth in the past 3 quarters, down from 3.1% in Q3 and in line with the advanced estimate. Now, this was not a surprise. We knew from the Atlanta Fed estimates that we were going to probably be getting a 2.3% read instead of 2.5%. It is down from 3.1%. The question becomes, can we normalize this at 2.3%, 2.5%, or do we go below 2%? And if we go below 2%, then we probably have some cracks in the economy. One could argue that with the advancements of AI, robotics, etc., we should be able to expedite this GDP growth massively. Satya Nadella, the CEO of Microsoft, did say that we need to get to 10% GDP growth because of AI. So I don't think this trend is necessarily going to deaccelerate as long as there really is an ROI from all this AI CapEx spend. And if there is, then hopefully we stay at this 2.3, 2.5%. One of the reasons I like investing in companies across the world like Grab is because their GDP in Southeast Asia as a region is compounding at about a 5.5 to 6%, which is only less than India, which is around 7%. So to me, it's like, if you want to get, investments in the most quality companies in regions that simply have more people buying cell phones, more people that have disposable income, more people joining the middle class, that's other places you can look to outside of just the United States, especially if the United States is a bit more expensive. Cool. All right, let's get into NVIDIA. First of all, let me know in the chat what you guys thought. Was it a good quarter? Was it a bad quarter? Were you impressed? Were you not impressed? I was impressed. I bought another 30 shares last night. I am getting a lot more comfortable buying more shares of NVIDIA. I bought them at 130 last night in the overnight markets on Robinhood. I also have to tell you guys about the option premiums that I was looking at into last night because it was really surprising to me. So after we go through the results, we'll talk about some of the covered call premiums that I did not expect. But when I really did a deep dive last night, I was like, oh, this is a different strategy that can be utilized. So we'll talk more about that. But in general, I think they crushed it. So real quick, let's hear from Jensen and get his thoughts on the quarter in terms of what NVIDIA is becoming post DeepSeek, or at least post the perception of DeepSeek. And then we will talk about the actual numbers themselves.
Really exciting companies. And there's several of them related to physical AIs. There's just handfuls of each one of them, and each one of them needs additional compute. And that's, the type of things that Andy talks about, because they need to go to AWS and they have urgent need for more compute right away. And so that's on top of what we already knew to have POs and forecasts and such. The midterm comes from the fact that this year's capital investment for data centers is so much greater than last year's. And of course, we had a very large year last year. We had a great year last year. It stands to reason that with Blackwell and with all the new data centers going online, we're going to have a fairly great year. Now, long term, the thing that's really exciting is we're just at the beginning of the reasoning AI era. This is the time when AI is thinking to itself before it answers a question. Instead of just immediately generating an answer, it'll reason about it, maybe break it down step by step. It'll do maybe some searching in its own mind before it creates and composes a smart answer for you. The amount of computation necessary to do that reasoning process is 100 times more than what we used to do. So if you could imagine, we thought computation, the amount of compute necessary was a lot last year. And then all of a sudden, reasoning AI, DeepSeek was an example of that. ChatGPT 4o is an example of that. Grok 3 reasoning is an example of that. So all of these reasoning AI models now need a lot more compute than what we used to
let me stop you there,
because puts even more load.
Because some people took DeepSeek to mean actually that you need less compute, right? Because the initial report was that they were doing more with less. But you're saying, in fact, some of what came out of DeepSeek was the opposite, that there's going to be more compute demanded. Unpack that for me.
There are 3 phases in how AI works, how AI is developed largely. Number 1 is pre-training. It's kind of like us going through high school. A lot of basic math, basic language, basic everything. That basic understanding of human knowledge is essential to do what's the next step, which is called post-training. In post-training, you might get human feedback. It's like a teacher showing it to you. We call it reinforcement learning, human feedback. You might practice and do thought experiments. This is preparing for a test. You're doing a whole lot of practices. We call it reinforcement learning, AI feedback. You could either also do tests and practice, and we call it reinforcement learning, verifiable reward feedback. So now basically it's AIs teaching AIs how to be better AIs. That post-training process is where an enormous amount of innovation is happening right now. A lot of it happened with these reasoning models. And that computation load could be 100 times more than pre-training.
That's it. I mean, that's all we needed to hear from the call. He could have said that on the call, and basically the call could have been over. Like, the fact that he's saying the computational power for post-training is 100 times more based on the reasoning. And if you've used any of the recent models that involve reasoning, basically it's like the model thinking for itself and showing how it's thinking and then giving you a better output because of all that thinking. That means more NVIDIA chips. That means more demand. And so as a result, how do we sort of reconcile this as investors in the numbers? Well, NVIDIA guided for $43 billion in Q1 revenues. And their guide, they usually beat by minimum $1 billion. They're probably going to do $44 billion. And so this is a company that is absolutely growing, and they are not slowing down. So overall revenues were 39.3 versus 38, 11 billion of Blackwell versus 9 billion. Most people thought it was going to be 9 billion. I don't think any of the sell side analysts thought we would get 9, or we thought we would get 11 billion of Blackwell revenues, but we did. And then 89 cents versus 85 cents adjusted when it came to EPS. So, I mean, when you look at this stuff, it just reminds you that these numbers are real. They're not fake. Demand for Blackwell is amazing as reasoning AI adds another scale law, which is what Jensen said last night. They did 72 billion in profits, up 145% year over year. They have a 55% net income margin. That means for every dollar of revenue, 55 cents becomes profit. The reason why that's so amazing is because this is a hardware company, not a software company. There is software involved, obviously, but the fact that they're able to bring up as much net income as Google, they brought in 22 billion last quarter. Google brought in 25 billion, and Google has juicy margins on search. Nvidia has to make an actual chip and try to figure out how to get a margin there. It's just incredible. And then they bought back $7.8 billion of their stock. They still have another $40 billion they can use to initiate buybacks. I don't know if the stock's going to pump this morning. And in fact, if the stock doesn't pump this morning, if we get a dip below 125 again, I will absolutely be excited to buy that dip. My average is at now 125.3. If we get below that average, I will get excited to buy. But nothing in this quarter showed me that there's a red flag. Now, I know there are some people saying, well, the gross margins are starting to go down. The overall growth rates as a percentage of the previous growth rates sequentially are starting to slow down. They're not beating by as much as they used to beat by. They used to beat by 2.5 billion. Now they're beating by 1.5 billion. I get it. Those are all, in my opinion, idiosyncratic concerns. They're not emblematic of structural problems with NVIDIA. They're definitely not emblematic of a demand problem when it comes to NVIDIA. And Amazon's CEO, Andy Jassy, literally said yesterday, hey, if we had more chips, AKA if we were not as supply constrained, we could sell more cloud workloads of AWS. That comes back to NVIDIA being able to not be supply constrained as well and provide them the chips. Another thing that was so important on the call, and I know we got Trump tariffs going on right now. That's why the market's taking a little bit of a breather. We'll talk about the Trump tariffs because he is headfast on getting these tariffs to come in. Another thing that they talked about is Blackwell Ultra, which is a next generation above Blackwell, and then Rubin, which is the next generation above Blackwell Ultra. So they were talking about two different generations of chips that they're getting ready to ship, basically priming their customers to be able to get in line for, essentially, once they are released. And they've barely begun shipping Blackwell. I'm like, this is a company that is absolutely looking into the future when it comes to their product roadmap, their product velocity, and how to maintain those growth rates. Also, as Lewis says right here, they did say margins will return to the mid-70s by the second half of the year. So although it's probably going to bottom out at around 70% flat in H1, so for the next 2 quarters, by Q3, Q4, we should get back up hopefully to around that 75% range, which means I don't think margin compression should be something the street would be super upset about, even though margins are not at 77% anymore. So, I mean, like, yeah, I'm buying Nvidia. Like, I think this was a great quarter. And if we actually do get a dip, if this thing drops below 125, which is like when I really get excited, even if it gets like 126, 127 again, I mean, I want to own that name. I think one thing that's happening with Max 7, and we're going to take a look at a lot of the Max 7 EPSs and forward earnings, because it's quite phenomenal when you take a look at the Max 7 compared to each other, how cheaply they're trading. I think we are currently in a market environment where tech is sold off. Nvidia might just end up selling off because Google, Amazon, Meta, et cetera, are all sold off as well. Which is not the best for Tesla because Tesla's already at a pretty extended multiple, so that's getting compressed. But if 2025 is the year of accumulating the best companies in the world, because for whatever reason the market wants to rotate into other assets that are, I don't think as high quality, but nonetheless they want to broaden the market momentum, which is not the worst thing in the world, then I think we all get a great opportunity to accumulate amazing companies at ridiculous discounts that are, by the way, not going to be affected by interest rates. I mean, for the far majority of these companies, they will be okay whether interest rates go up and down because they have enough cash to buy back their shares. They have incredible free cash flows, and they have moats that aren't contingent on rates going up or down. So, I mean, I think the quarter was incredible, and I think the quarter is another reason for me to get more excited to add to my position. Now, here's what I wanted to say about the covered calls. I was actually on the phone with Steve last night, and he brought this to my attention. I couldn't believe this when he said this, and some of you guys probably know this, but the reason I didn't sell covered calls on Nvidia was for two reasons. Number one, I wanted to see if earnings could get a little bit of a recap or a little bit of a rebound. And if they did, then it would be more prudent to sell covered calls after we get some green, which is what we're seeing right now. Hopefully it lasts in the market open. But the other reason was because I just didn't want to give up my shares for cheap, right? Based on what I was looking at last night, and when the market opens, we'll kind of do an update on this. Nvidia is paying almost 3% a week, 10% out of the money. Let me say that again. 10% out of the money per week. Nvidia is paying around 2.5 to 3% on the covered call. Yesterday, I was looking at, and this number will change right now, but I was looking at the $142 covered call. It's paying you $3 a contract for March 7th. Why does this matter? As an option seller, theta is your best friend. You want theta to expire worthless. You want it to go to zero, which gives you the ability to collect all the premium. Now, if you are holding an option, aka a $142 call on Nvidia, which means you're putting up your shares to get sold at 142. If Nvidia is above 142, your shares get called away, and you have to wait 30 days. Well, a lot could happen in 30 days. In 30 days, I mean, Nvidia could rebound. It could get above 142. It could theoretically go up 10%. In a week, it's a bit unlikely, right? Like in a week, like, and he was showing, I was like, I don't believe you. And he was like, no. He was like, when I found this out as well, I realized that selling covered calls weekly on Nvidia is a hell of a form of income generation. And the numbers are correct. You can go 10 to 12% out of the money, which means Nvidia would have to move like $250 to $300 billion in that week in order for your shares to get called away, and still capture about 3% on your money, aka on the shares that you have. So for me, I have 500 shares. Now I have 530 shares. I could sell 5 covered calls theoretically at the $142 strike for March 7th, and I could pick up $1,500 in income for the week, not for the month, for the week. And I was just like, okay, if I want to do 145, be even more conservative, I can pick up $1,200 for the week. And if Nvidia does get to 145, okay, I'll roll that contract, because if I don't expect Nvidia to go from 145 to 150 to 160 and for me to be underwater on those covered calls, right? I don't expect it to be like a Palantir situation where you write a call at 40 and then Palantir goes to 80. We're not in 2024 anymore. And in general, I think market volatility will be to the downside even after big moves, or at least it'll be flat versus just up and up and up and up. And maybe it could just be up and up and up, but I would hedge my bets against that. If that's the case, I mean, if you've got Nvidia shares and you're willing to sell some covered calls on it decently out of the money, 10, 15%, and you could still collect almost 2% or maybe 2.5% on your money per week. I mean, goodness gracious, dude. It's like, I didn't realize the options market for Nvidia was that amazing. That's just because it's earnings week. Well, that's fair. Now, based on what Steve was telling me, he's been doing this for a couple weeks now, and it's not just been because of earnings. But we'll see in the morning at 9:30. We'll see where it opens up. I would want to write the covered call for March 7th, and we'll see if these premiums collapse or if they're still reasonable. But the fact is, the open interest is insanity. Why is the open interest insanity? Because 300 million shares, yesterday it was 298.7 million shares a day are traded on Nvidia. And that's when I realized, like, I just wasn't looking deeply into it, which is that, holy crap, the options market is insane. and people are gambling. I mean, dude, people are buying $200 calls for like 3 weeks out. I don't know who's doing it, but someone's doing it. And I wouldn't mind selling them those calls. So the fact that the options market is this juicy is very exciting. And I think it's only going to get juicier as NVIDIA continues to gain more momentum. If it dips, I want to buy these shares because I think this is one of the best quality Max 7s that we have currently right now. So that's what we got on NVIDIA. All right, we'll talk more about NVIDIA in a bit. We'll get deeper into the numbers, but the headline numbers to me were incredible. I don't think this is a day where you sell NVIDIA because the stock is flat or down. I think the market's just kind of scared about the cyclicality. The market's probably going to keep being scared until NVIDIA keeps putting up numbers. But eventually, as the Max 7 gets back to normal, I think NVIDIA will be one of the big winners in that race. Let's talk about tariffs. Trump is announcing new tariffs and definitely has the market a little scared, especially because those tariffs are coming now to the EU. Let's get an update on that.
Yesterday over exactly which tariffs are likely to kick in on which date. A White House official tells me there's no change to the original schedule, which had the deadline for Canada and Mexico tariffs kicking in next week on March 4th. Remember, the president had postponed those, and a deadline for a study on reciprocal tariffs. That's going to happen on April 1st, and that's why you hear the president talk about April 2nd as a big possible date for more reciprocal tariffs worldwide. Meanwhile, President Trump said he's made up his mind for tariffs on the European Union, which he said he'll be announcing soon, and which will generally be 25%. He was sharply critical of Europeans for not accepting, as he said, American cars and farm products, and he expressed hostility to the European Union itself.
European Union's it was formed in order to screw the United States. I mean, look, let's be honest. The European Union was formed in order to screw the United States. That's the purpose of it. And they've done a good job of it, but now I'm president.
So after talking to some officials behind the scenes, our understanding now is that these 25% tariffs on Europe would be put in place after that April 1st study is completed, assuming the study comes in the way the president expects it to. But there's a lot of moving parts here, and the president clearly wants to preserve his leverage and not make any commitments until he has to. So a lot of these things, guys, are simply open-ended at this point. Will he grant additional extensions? Will there be a requirement for additional studies? Will these tariffs ever actually kick in? All of that still TBD.
Question. The prospect of tariffs is almost worse than tariffs themselves, insofar as it creates a remarkable amount of uncertainty for businesses that are trying to think.
Okay, so that was the update from the EU yesterday. Trump just tweeted 22 minutes ago. He says, okay, this is what he said. Drugs are still pouring into our country from Mexico and Canada at very high and unacceptable levels. A very large percentage of these drugs, much of them in the form of fentanyl, are made and supplied by China. More than 100,000 people died last year due to the distribution of these drugs. Millions of people have died over the past 2 decades. China will likewise be charged an additional 10% tariff on March 4th. We cannot allow this scourge to continue to harm the USA, and therefore, until it stops or is seriously limited, the proposed tariffs scheduled to go into effect will go into effect on March 4th. And I believe he is saying this, for Mexico, Canada, and China. Yeah, because he mentioned Mexico and Canada at the top of this. So this was tweeted 22 minutes ago, 8:46 a.m. Mexico, Canada, and China. So the thing about Mexico and Canada tariffs is that they were going to be delayed based on the negotiations that he had with Trudeau and the Mexican president, I think a month ago, maybe 3 weeks ago. It looks like he thinks that they have not held up their end of the bargain when it comes to getting drugs to not come into the States. And so March 4th is the new date, which is only a week away from now. S&P is up, though. I mean, market's not really reacting to this. S&P was up 0.25%. Now it's up almost 0.5%. So S&P actually went green after this headline came out. I think the market either has internalized this and they don't care, or they still don't literally believe the tariffs will happen, or they think Doge is going to be enough to offset the inflation we're going to get from tariffs because of the cuts. I mean, the market's not, it's not like 3 Sundays ago where the market just absolutely tanked off the even notion that Trump would do tariffs. I mean, Robinhood should not be up 6% in the pre-markets if the market's tanking. Like that should be the first thing to take a little bit of a breather. Neither should Bitcoin. Bitcoin's back to 86,000. It was at 82 last night. So Bitcoin, nice little rebound. It's 2,000 away from going below 80. I don't think the market buys this yet at all. I think it's already priced in. I mean, one of the beautiful things about the market is that sometimes things get priced in. Now, granted, either they don't believe him or it's priced in and they don't care. Maybe it's more so on the line of they don't believe him. But as of now, the market's not reacting to it, at least right now. March 4th, that's the date, folks. March 4th. That's what we've got to look at when it comes to these tariffs. Regardless of the tariffs, I think NVIDIA earnings were absolutely exceptional. And a lot of these companies are putting up incredible earnings regardless of what happens in the macro. Obviously, the macro is not something we can ignore, but at least when we're looking at these individual companies, they did put up incredible numbers, including NVIDIA. Here are the analyst revisions and ratings. I had a feeling most of the analysts would come up to about 200, and I think we got kind of close here. So Truist, 205, buy. Bank of America, 200, buy. Cantor Fitzgerald, 200, buy. Evercore, 190. KeyBank, 190. UBS, 185. Jefferies, 185. Bernstein raised from 175 to 185. Wolfe Research, 180. Stifel, 180. Piper Sandler, 175. I mean, pretty much everyone is getting into that $200 range, or at least 185 to 190 range. D.A. Davidson is one of the most bearish analysts on NVIDIA. They have neutral at 135. Everyone else is sipping the Jensen Kool-Aid, and they are raising their price targets higher when it comes to NVIDIA. So, I mean, we'll talk more about NVIDIA, but I think it makes sense that they're getting upgraded across the board. I don't know if this 2% pump is going to last when we get into it as the market opens, but as of now, the market's definitely a bit excited for those earnings. VST also had earnings today. Vistra Corp, they are up 6.39%. That is a nice sign to see them up after falling about 30% over the past month. They were up about 7% yesterday. This is another company that deals with data centers, so it makes sense that if NVIDIA is having a good earnings, then Vistra should be able to capitalize on their earnings. Their actual numbers, let me see if I can get the actual numbers. I don't have them here, but I would imagine they gave good guidance for data center growth. Net income, $490 million. Wow. Last year they lost $184 million. This year they had $490 million. Adjusted EBITDA, $1.99 billion. That's up 106% year over year. They reaffirmed their fiscal year 2025 guidance of doing about $5.5 billion in EBITDA and $3 billion in free cash flow. And they bought back about $4.9 billion of shares over the past couple of years. They have 338 million shares left. 1.9 billion is remaining on their share repurchase agreement to be completed by 2026. Looks like they increased a little bit of the agreement to buy their shares, and they reaffirmed their guidance for 2025. They have 1.19 billion in cash. CEO said 2024 was a record and transformational year for Vistra. We added nuclear assets, expanded retail, and exceeded financial targets, all while reinforcing our commitment to clean energy and shareholder value. Let's check Vertiv then if VST is pumping. Vertiv is up 5%. Wow, look at that. Data center plays getting some love. Data center plays are definitely getting some love. The only one that's not getting any love, which is the ironic one, is SMCI. Why is this thing down 2%? I mean, like, NVIDIA absolutely demolished it. They're going to do $43 billion next quarter. I would imagine that's going to be in part because SMCI is supplying them with all the servers they need for these GPUs. SMCI basically at levels it was at a couple of days ago. I mean, the 10K pump was at $66 a week and a half ago. The 10K pump happened last night, and then it kind of faded throughout the day. It was up 20%, then it was up 12%. Now right here, it's up 1.5%. So I wouldn't be surprised if SMCI gets a little bit of a re-rating today after these NVIDIA results are really factored in, but we're going to find out once the market opens. Overall semis, ARM is up 2.5%, Marvell's up 3%, Taiwan Semi's up 0.25%, SMCI is down 1.3%, Intel's up 1%, AMD's up 1%, Nvidia's up 2.2%, Dell's up 2%, Micron's up 1.7%, and then Broadcom as well benefits from Nvidia. They're up 2.3%. There you go. That's what we got on Nvidia. SMCI also got the green light from the NASDAQ saying they're good to go. That is correct. So, I mean, I don't know. I would imagine we could get a little bit of a rebound, but we're going to see if that happens today. Cool. So, yeah, I mean, I think NVIDIA crushed it. From what I'm seeing from you guys in the chat, a lot of you guys were pretty happy with this NVIDIA earnings. Obviously, the stock is not like doing anything explosive, which is like, you know, it's just boring in general to see how the stock reacts because it doesn't do anything on any of these earnings. Every time it's just flat, but it's at least nice to see that, and hopefully the stock kind of lives up to that over the long term as well. Okay, so here's something I want to show you guys, and then we have a couple of headlines. Well, two headlines. Let me show you guys. Let me give two headlines, and then I want to look at some of these Mag 7 forward earnings after the re-rating that has happened over the past couple of weeks. Number one is Mr. Beast is looking to raise a $5 billion valuation. what is Mr. Beast's company? It's essentially, I would argue, his YouTube channel. So he just did a show on Amazon. Let me know if anyone watched it. I didn't watch it. I'm getting kind of just tired of Mr. Beast content on YouTube. It's very sensational. It's like trapping 2 people in a box and whoever survives gets $1 million. Like, I don't know. At this stage of my life, it's just not content that I can sit through and actually consume. But he has had a lot of success. He is the most subscribed YouTuber on the planet. And he has his own chocolate brand, all that stuff. He's raising at $5 billion. Now, why am I bringing that up? Because none of us can probably invest in Mr. Beast's $5 billion funding round. I'm bringing it up because, I mean, there's liquidity out there. If Mr. Beast can raise that $5 billion, like, yeah, like if he can raise a couple $100 million at a $5 billion valuation, these are like, it's more expensive than some of these AI startups. That means there is enough liquidity out there that is willing to say, you know what? I have nothing better to do with my money than give it to Mr. freaking Beast. And as a result, it definitely means that I think we're going to have more IPOs that are getting ready to get geared up for the second half of 2025. Christina says, my kids love him. Yeah, I would imagine. I mean, kids watch him a lot and they're attracted to this like sensational type of content where you could win a Lamborghini or something like that. And I think I used to watch his content years ago. Now it's just like, I don't know. I need something boring about the stock market to entertain me versus this type of sensational stuff. But he is attracting a massive audience, and as a result, he could raise at a $5 billion valuation. Now, because Mr. Beast is raising at a $5 billion valuation, again, you would imagine that other companies are getting ready to go public as well. Stripe has not announced that they're getting ready to go public, but they did announce a tender offer at a $91.5 billion valuation. They hit about $1 trillion in transaction volumes. So I think we're going to see a lot more of these numbers come out by the Andurils, the Discords of the world, all these companies that are getting ready to go public and access that stock market liquidity. They're going to start releasing more numbers. And as they release these more numbers, I think we're going to get a better chance for these companies to start going public. I don't know if I would buy Stripe. I got to see the financials. I think 95 billion or 91 billion feels lofty. Now, granted, Stripe is everywhere. So there is a world where they're doing a couple billion in revenue and you could justify it. But I would definitely want to see what the numbers look like before just wanting to own Stripe. Oh, here's another one. CoreWeave. Yes, thank you for this comment right here. So I saw this headline in the morning as well. CoreWeave, which if you guys are deep in the semiconductor in NVIDIA space, and if you follow this company's journey, they're looking to go public at a $35 billion valuation. And this will be backed by NVIDIA, Cisco, Fidelity, and Jane Street. The company has been a key player in AI infrastructure, building data centers powered by NVIDIA GPUs. If I'm not wrong, at the end of 2023, their valuation was $7 billion. About 18 months later, they're at $35 billion. That's more than a 5x increase over the past 18 months. Either that means there's way too much money and these companies are overvalued, or that means that there is plenty of excitement and plenty of demand and plenty of money that wants to be allocated away just from NVIDIA into the NVIDIA derivatives. They would be raising $4 billion in their IPO if they go public at a $35 billion valuation. So for there to be $4 billion of liquidity that's just out there willing to come into a company like CoreWeave, it means that people either A, think the fundamentals of this company are amazing, or B, just don't know where else to put their money. And they don't want to put it into NVIDIA at a $3 trillion valuation. They want something that's cheaper, and they want to play NVIDIA without having to literally invest in NVIDIA. And as a result, we're seeing a lot more of these companies start to go more public. Doug says Stripe already have their S-curve growth. Why would you pay for the top? Let that thing IPO and drop 50%. That's my thoughts on Stripe as well. Stripe is also a fintech. And look, fintechs are cool, but fintechs, I think as a Robinhood investor, I've realized if your fintech is not innovating constantly, like at least one new product every single quarter that gets consumers excited, because at the end of the day, Stripe also is appealing to consumers, even though they're a B2B company. Then it's going to be hard to survive as a fintech. It's going to be hard to get the market to be excited about you when there's companies like Nvidia out there, and capital wants to flow into things that are safe, like tech. Fintech is not the safest, especially if it's consumer fintech, because consumers can change their mind and just like not choose to deposit their money in your product. And so you've really got to have a culture of innovation. I think the Carlson brothers that run Stripe are, some of the best founders in the world. The question is just, what do the numbers look like, and what is their go-to-market and their strategy to actually deliver long-term sustainable growth to public shareholders? But I guess we'll see eventually when they want to go public. Okay, I want to show you guys some forward EPS estimates. So this is courtesy of Steve. He sent this to me last night because he was getting a little upset at how the world is treating the Mag 7. And I think we need to talk about some of these estimates. Now, these numbers might not be exactly perfect because the share prices might have changed overnight, but they're relatively within 1% to 2% accurate of each other. take a look at some of these forward multiples of the Mag 7. I mean, this shit is crazy, bro. Like this is just absolutely insane. Google is trading at 19 times 2025 earnings. They are trading at 16 times 2026 earnings. If you don't think Google is going to collapse by 2026, would you be willing to pay 16 times earnings? I think a lot of people would, but the market's not doing that. Meta is trading at 23 times 2026 earnings. Nvidia is trading at 23 times 2026 earnings. Now, you could argue that Nvidia is cyclical and there's going to be a massive AI CapEx ingestion cycle by 2026, and then it's going to collapse. I mean, you could have that theory. I don't think that theory is necessarily correct. So I can understand why you want to discount that. But then at 2025 earnings, it's at 29 times. Really? Given the growth that you just said they're going to do in Q1, you're going to pay 29 times only for those earnings. Microsoft's at 30. Microsoft's not growing as much. I mean, Microsoft proves the point for Nvidia. Microsoft is growing 1/110th of Nvidia, and they're trading at the same multiple. Apple is trading more expensive than Nvidia for 2025. And Apple is getting ready to ship the iPhone 75 that's going to have like 7 touchscreens or something and be foldable, and that's going to be their new innovation. That's not actually what they're doing, but you get my point. Tesla, which is not even growing anymore, is trading at 3 times Nvidia's earnings. I mean, if Nvidia stays down, this is going to be one of the most undervalued Mag 7s that is out there outside of Google. And I think Google and Nvidia right now, to me, are screaming buys if they continue to stay at these multiples, because it's just insane the way the market is re-rating them. Why is the market re-rating like this? I don't know. I'm really not sure, but they are. Costco is trading at 50 times 2026 forward PE. Google is trading at 16 times. Is Costco a little bit better of a buy than Google? I don't think so. I don't think Costco is a better buy than Google. Price to free cash flow, Nvidia's trading at 56 right now. Alphabet's trading at 29. Again, their free cash flows are incredible. And the beautiful thing about Nvidia is as these numbers continue to go down, or as the stock prices continue to go down, but the earnings continue to deliver, these PEs get even more compressed. These free cash flow multiples get even more compressed. And it just gets very, very exciting to see how these stock prices will react once the market eventually figures out, in my opinion, that the Mag 7 is undervalued. I think the market knows the Mag 7 is undervalued as well. I just think the market is not willing to pull the trigger yet. Like, I don't get why they're having Google below 180. I mean, yesterday it got to 172. It's like, I don't get it. I don't know what it's got to be something around sentiment around the broader AI narrative and AI theme, kind of this game of musical chairs, and the market is afraid that the music's going to stop playing, and then all these companies that benefited from CapEx, they're just going to like not benefit anymore. It's just going to go away as quick as it came. And if that's not happening, if that cyclicality is not there, if cloud is only constrained by supply, Nvidia is only constrained by supply, this is not a demand issue, then these are some of the most attractive companies in the market right now. They're not going to be multi-baggers over the next couple of years, but they're definitely going to be sort of solid, I would imagine 20 to 30%, maybe 40% plays by the end of the next 2 years. And I mean, what more can you ask from some of the best companies in the world? So I think it's exciting. They've got to keep up the growth to justify these multiples, but they are keeping up the growth so far. And as long as that's the case, hopefully these multiples continue to get exciting. Tesla is obviously one of the most expensive ones. If you saw on that chart, Tesla, the fact that Tesla's not growing is, one of the reasons why their PE is as high. But when you compare it to some of these other names, it just gets more and more attractive. If we talk about Tesla for a second, I mean, Tesla hit a new low yesterday of 287 for 2025. I think a combination of multiple things are happening on Tesla. Obviously, we talked about a couple of days ago, the Tesla politics angle with Elon just not being part of the company as actively. He was literally in the first cabinet meeting yesterday as well. So the first presidential cabinet meeting that we had yesterday for Trump, Elon was there and he was speaking in it, which is, he wasn't at Tesla. He was speaking to the cat. So you could have that argument for why the market's upset. You could also have the European deliveries going down. Obviously, when the Model Y releases, that'll probably change a little bit of the narrative. We should see an uptick in those deliveries. But as of now, I think a lot of people just think that he's distracted. Here's Elon yesterday at the president's first cabinet meeting.
Point. Knock on wood, knock on my wooden head. There's got a lot of wood up there. That we can actually find $1 trillion in savings. That would be a roughly 15% of the $7 trillion budget. And obviously that can only be done with the support of everyone in this room. And I'd like to thank everyone for your support. Thank you very much. This can only be done with your support. I actually just call myself a humble tech support here because this is actually, as crazy as it sounds, That is almost a literal description of the work that the Doge team is doing, is helping fix the government computer systems. Many of these systems are extremely old. They don't communicate. There are a lot of mistakes in the systems. The software doesn't work. So we are actually tech support. It's ironic, but it's true. The overall goal here with the Doge team is to help address the enormous deficit. We simply cannot sustain as a country $2 trillion deficits. The interest rates, just the interest on the national debt, now exceeds the Defense Department spending. We spend a lot on the Defense Department, but we're spending like over $1 trillion on interest. If this continues, the country will become de facto bankrupt. It's not an optional thing; it is an essential thing. That's the reason
So that was Elon yesterday. On top of that, Trump signed a new Doge executive order mandating federal agencies implement a technology solution to review and cut all spending, track employee spending with clear identifications, and report to a Doge liaison. So the TLDR is that all federal agencies are now going through Doge cutting. And I also think that's why Elon was at that meeting, because he's not going away anytime soon if the president is forcing every single government agency to abide with what's going on when it comes to Doge. So, yeah, at this point, I really do think Tesla is trading off narratives. There are some fundamentals that are hurting the auto business, which is probably creating some weakness, macro weakness. But in general, I do think there's a decent amount of shareholders, just based on the people that I talk to, that are just upset that he's spending all his time not at Tesla and with the government. And it is what it is. If you are a Tesla shareholder, you've been a Tesla shareholder for a long time, this volatility probably. I was talking to Farzad yesterday on his podcast, and I said, "What do you think of everything going on?" And he was like, "Dude, this is like the 17th time where the stock goes up really quick and then comes down really quick after Elon gets distracted." Like, it is what it is. At this point, you kind of believe in the long-term vision or you don't. But most of the OG Tesla shareholders have been through this many times before. We got about a minute and a half until the market opens. Let's see how this plays out. Palantir, Alex Karp's book, is a New York Times bestseller. That was announced yesterday, which is very, very exciting. I'm still reading the book. I'm going to be posting a couple excerpts from the book that I liked over the weekend. And there were some really good quotes in a few chapters that I thought were just exceptional. So on my Twitter, I'll do that. And then I'll make a full video kind of reviewing the book in and of itself. But it's a New York Times bestseller, #1, The Technological Republic, that was announced yesterday. So really nice to see him get this type of recognition. And I think it is only going to create more and more marketing for the brand of Palantir. Palantir right here, $92 in the pre-markets. Let's see if we can make a little progress, maybe back to 95, hold these levels at least. So far, for the past couple of days, if we pumped a little bit in the pre-market, it would get dumped basically by like 9:50. So 20 minutes after the market opens. So today, I guess we're going to see how long that can continue. 40 seconds. All eyes on NVIDIA. I have some plans to sell covered calls on NVIDIA today, weekly covered calls. Again, if you're just joining, we were talking about earlier in the show that weekly covered calls are paying about 2.5%. And I did not know that, which is insane. It's a lot more safer than monthly calls if you give it only 7 days to expire, 10 days to expire, and still able to get 2.5 to 3%. So let's see where the stock opens, and then we'll see what call I would like to sell on my 500 shares. I did buy 30 shares last night at 130. I think the quarter was good. If this thing dumps back below 125, I'll get excited to buy again. But we'll see if the numbers were good enough to get NVIDIA to continue this pump and maybe pump up the rest of the market as well. All right, here we go. 9:30 a.m. Thank you, everybody, for being here. The stock market is once again open. All right, wake your ass up. NVIDIA opens 2.4%, 135. We did hit 135 or 134. We did hit 135 at 1.134.4 is where we are at. A little bit of a red candle right from that 135 level, but we are holding the 130s up 2%. Let's see if that can get back up to the 136, 137 range. Palantir opens up 2.5%. Palantir 91.58. Palantir is green after a couple of days of red. We are getting a little bit more momentum. I think yesterday we closed at 90, which was nice, 91.7 on Palantir. S&P 500, even with the Trump tariff threats that he announced 30 minutes ago that would go into effect on March 4th, the market either doesn't believe him or does not care. 597 on the S&P. That is up 0.5% and not giving up any of their gains from the pre-market simply because of what Trump said about tariffs. Marathon, they had a great earnings yesterday, 13%. That one is green. eBay down 7%. Their earnings were kind of IONQ, their earnings were also kind of That one's down 7%. Snowflake, great earnings as well. That's up 11%, getting a little bit of a rejection at that 187 level, but currently at 184. They grew at 28%, reaccelerated growth, bought back some of their stock. Stock-based comp is still a high percentage of their revenue at 51%, but nonetheless, Snowflake getting some upgrades this morning after a good quarter. That's up 11.2%. Google, 173, that's up 0.5%. Microsoft, 403, that's up about 1%. Grab, 489, have some new updates on Grab in terms of some stats that I'll share in a little bit. That's up about 0.5% currently right now. Robinhood is up 6.5%. Absolutely incredible rebound. I mean, we got 7% yesterday. To get another 6% today is like really nice to see. I think the market's basically calling BS on some of this volatility we've seen, because if they think that the volatility is going to go to the upside, that's why they're be buying Hood right now. Same thing on the crypto market. So Robinhood, 52.14. There was no fundamental news that was announced on Robinhood over the past couple of days. So this is really all a reversal based on sentiment. Up 7%, 52.30 currently right now on Hood. SMCI, that's down 3%, which is surprising. Didn't expect that, but that's down. Nvidia barely holding on to its green, 1.67%, 133 right now. You got the S&P right here at 597. Tesla at 294. I don't know if Tesla's going to start normalizing being below the 200s or being below the 300s, but we are, for the second day in a row, opening below 300. Palantir, 93.28, up 4.5%. So Palantir getting some love right here, trying to get back into the 93 range. Rocket Lab, which will have earnings today, I'll be live to cover that, 21.94. That's up 3.39%. I was on a Rocket Lab Spaces yesterday with a bunch of OG Rocket Lab investors, and they are feeling pretty confident about earnings. Their one bear case is that Neutron gets delayed for another couple of years, which is what the short report said a couple of days ago. If that's the case, they think Rocket Lab's going back to $10. Hopefully that doesn't happen. I have no clue on if Neutron would be delayed or not. I'm just assuming it doesn't get like a massive 2-year delay. But we'll be live tonight covering it and see how this plays out. They're guiding for about 125% growth. I think what could really explode Rocket Lab is two things. Number one, if they announce that they're profitable 3 quarters before they said they would be profitable, they said they're going to be profitable Q3. If they end up being profitable in Q4 of 2024, I'm not expecting that, but that would be amazing. Number two is if they launch Neutron in 6 months and they name it Jimmy along with Neutron, and they just end up calling it Jimmy Neutron. I mean, I would buy 1,000 shares of me. If Peter Beck tomorrow says we are changing the name of Neutron to Jimmy Neutron, I would buy some shares. They would at least get my money if that happens. So if any of those two things happens, I think Rocket Lab can pump tomorrow. Apple right here, 240. That is down about 0.12%. Enphase is down 2.5%. SolarEdge is down 3.2%. CleanSpark getting a little bit of momentum from the Marathon earnings. Chipotle, that's up about 1%. Oklow's up 5.2%. Archer is up 4.2%. They have earnings as well. Nubank, 1152. That one's doing well. Verizon is down. Crown Castle is down. T-Mobile is down. Berkshire Hathaway is down. So some of these value plays that we're catching a bit over the past couple of days, they are down. SoFi, 1469, that's up 1.52%. Disney is up a little bit. Nike is down slightly, even though it was up about 7% for the week. Palantir right here, 93. Tesla, 295. And then Nvidia, 132, giving up a majority of their pump. They're very close to going red. It looks like they want to go red, but Nvidia right here at 132.23 currently right now. Where is Vistra? VST is, wow, Vistra goes red. They were up 7% in the pre-markets. They go red. VRT, they were up 7%. They're only up 2%. It looks like Nvidia might go red here. It looks like Nvidia might go red here. Selling calls into the report was the play. That is correct. I didn't sell calls because I thought, maybe if we get some upside momentum, I don't want to be capped with it. But yeah, Theta Gang continues to win. So I'm looking at the calls right now. March 7th. If you look at the March 7 call, yeah, all of those got hit. If we go to March 14th, you get better premiums. You could sell the 142 call for $2 a contract for March 14th. That one did get decimated today. That one's down 40%. So still a good return. I mean, it's not about 2.5%. It's around 2% in a week, in a week and a half, which is not crazy. But yeah, if Nvidia doesn't do a reversal, a lot of these calls just got hit badly with IV Crush. Hims, where's Hims right now? Hims is at 43. Hims up 5%, getting a little bit of a rebound as well. Tesla 296, Palantir 93, holding on to that 93 level. Salesforce is down 3%. They had a good earnings. Salesforce was not bad. I think revenue growth on the guidance was a little bit lower than expected. Management thinks that because they have a new CFO, they're sandbagging on the actual growth guidance, and they're going to do 10% versus 8%. But those 2 percentage points is probably why the street is a little upset, down 2%. Overall, pretty damn good quarter. NVIDIA right here, 132. SMH, semiconductor ETF, that is up 0.5%. And then where is Snowflake, that also had good quarter, almost $1 billion in revenue? They are at 183. They're up 10%. So Snowflake earnings seems to continue that pump. Barclays did raise their SMCI price target to 59. That is correct. We did get some new upgrades today on SMCI. SMCI down 5%. So look, if you're long the AI trade and you're long SMCI, I don't think this price action matters. But if you literally only got into it because of the 10K stuff and NVIDIA earnings as a catalyst, then the trade's kind of done at this point. Like, unless it reverses back up to 55, $60. You had 55 like 3 times in the past week, and at one point we had 66. I sold at 42, so obviously I was a bit early, but this one looks like it's just going back to being a normal stock and not really caring too much about what happens with Nvidia or about their 10K being a catalyst. Trade desk right here, 72.77. That's down 0.5%, or that's up 0.5%. Meta 682 back into the 680s. It was at 650 2 days ago. S&P 500 is green. Berkshire is now green. Apple just turned green. General Motors is red. MicroStrategy is green. MSTR right here at 270. They bottomed out at 242 a couple days ago. They are now green as well. Honest is down 16%. I think they had a good report, but I think we have to remember this is a small cap. And so anything can happen with a small cap. I mean, it's trading under $500 million in market cap. So I don't know why they're down 18%. The numbers that I looked at yesterday were pretty good, but I guess something they said and the lack of shares outstanding can, get this thing to tank or go up very quickly. So looks like that's why Honest is down 18.3%. Root is also up right now. That one is up 26%. That's a $1.88 billion company. So it's still a small cap, but not sort of a micro small cap. That one currently up 27%. Palantir, let me check resistance for 94. Looks like it wants to go after that. Interesting that Palantir's up and Nvidia is down. You would think it would go down with Nvidia, but it is moving the opposite direction. 94 is 25,000 shares. So not a lot separating Palantir from 93 to 94. Nvidia is going down. Yeah, I mean, I kind of expected this as well after this, saw the pre-market action. There you go. Nvidia's red. So at this point, I would like it to go down below 125. Like, if it's really going to go red, do the same thing that Hood did. Give us 45. Give us a juicy dip. Give us 120 again. Like, give us a dip that's worth buying. Because the PE is just going to... I mean, look, the PE now on Nvidia is 31. Yesterday it was 47. Like, I mean, it's just... It's going to get cheaper if this thing keeps falling, and I would not mind that. Where is Hoodie? Are we still at 52? Wow, Hood's going for 53, 52.41 right now. Hit 52.8. Anyone who bought the Hood dip past couple days, not too bad. And 50 is also starting to kind of be support. I mean, we were below 50 for 2 days max, and maybe we go back below 50, but it does look like 50 wants to be a line of good support here. Where's Grab? Where's Grab as we open? Grab had a great day yesterday. Grab right here, 46, down about 0.21%, so basically flat. So here's a stat I found out about Grab today that I thought was really interesting. And again, these stats kind of just reinforce my belief that this is where I want to be invested in Southeast Asia. But a new study came out by the Thailand Development Research. Grab, the company, the $20 billion company that I like and that I think can be $10 in a couple of years, accounts for 1% of Thailand's GDP. It's just insane, bro. And they created 280,000 jobs in 2023. This study was released yesterday. So, I mean, when a company is that important to a country's GDP and they have a growth trajectory, I think that's very exciting. For Malaysia, another stat that I saw a couple of days ago, they are 2.5% of Malaysia's GDP. I think their $6 billion in cash is getting ready to do something exciting, whether it comes to a merger or to expand their operations. And eventually we're going to see, but it's one of those things where you got to be patient on. So we are seeing more and more momentum across that region with this company, and probably we'll see more momentum as they continue to grow. Rocket Lab right here, 2171. That's up 2%. Google 175, getting a little bit of green. Tesla 295, up 1.5%. And then Palantir 92, getting rejected at 93. Was trying to go for 94 at 93.50. Back down here to 92. Are you buying Rocket Lab puts to hedge? No, I actually sold Rocket Lab puts. So there is no hedge. If Rocket Lab If Rocket Lab goes down, I will be the proud owner of probably at least 1,000 new shares of Rocket Lab. AMD right here at 104. AMD is going red as well. Nvidia officially goes red. SMCI disgusting today. Why is this down 9%, dude? What is going on this? This is ugly. This is very ugly. Someone probably saw in the 10K that their numbers are not the best or something, dude. Like someone actually put a magnifying glass on the 10K and is looking at these numbers. That's down. Tesla is about to go red the way it's looking. Salesforce officially down 5%. Yeah, it's one of those days where pre-markets were bright green and we don't get a massive reversal, but we definitely do get rid of the brightness of that green. Now the green is kind of like a shimmering light instead of being as bright as it was. And that's been kind of the trend the entire like past 2 weeks, basically. Archer, it was up 5%. Now it's up 2%. You got red candles across the board. Walmart's up a little bit. Home Depot's up a little bit. Nubank's up a little bit. Verizon and AT&T just went green. There you go. That's your shift from growth to value. As soon as those go green, market's getting a bit more risk off. Where's Bitcoin? Bitcoin just went from 86 to 85. So another little bit of a sell-off here. Yeah, maybe tariffs getting a little bit more into the discussion. I mean, that could be something that's happening right here. They didn't react in the pre-market. Maybe they're reacting right now. The quantum names are red as well, all of them, by about 1 to 2%, nothing too crazy. The spec portfolio is all red except SoundHound up 0.5%, Archer's up 2%, GameStop and AMC up a little bit, Oklow's up a little bit, and then Color's up about 1%. Everything else pretty much red here right now. The indices are all green, though. That's correct. The indices are all green. Is AMD a falling knife? Been buying a while, money not destroyed if you don't sell. I think AMD has obviously been a falling knife since 130. And that's just, based on the price action. I do think someone buying AMD right now, 3 years from now, I don't think you're going to be upset. Like, I think the industry itself has too much of a tailwind for AMD to be staying at these levels, unless they massively mess up the opportunity. But the question is, do you want to have your money stuck in this thing for 3 years? And I think the far majority of the people that got into AMD, they don't actually care about AMD, the company. They just think it's a good opportunity and they're bottom fishing, which is fair. It's just when you bottom fish, sometimes you might end up bottom fishing for a long time because it takes time for companies to recover when you're going for the recovery play. So, and one could argue AMD shouldn't even recover to 200. 220 was its top in March of 2024 because it never should have been $224. That's when Bitcoin got to 70,000. Then we had a correction for a couple months. So I think the fair values I've seen on AMD is closer to 170 to 180. But if it's at 104, it's going to take a lot of market momentum and narrative shift for AMD to get there. Well, we're going to see. We're going to see what happens with this one. Market definitely going a bit red right here. Where's the 10-year? 10-year is at 4.292. It's nice to see the 10-year is down, but it's definitely down potentially for reasons that the market might not love. We are below 4.8, which is nice. The dollar, the Dixie today is at 107. That's up a little bit. That's up 0.5%. Was at 106 yesterday, currently right now at 107. Robin at 51.35, giving back a little bit of its pump as well. Got Grab right here at 485, Hims at 43, and then Palantir just went back below 91. Yeah, Tesla just went red. We're going red, folks. We're going red. We need a good sound for when the market tanks, bro. We only have bullish sounds. We need bearish sounds now. What are some good sounds we could have when things are going red? We need some movie quotes or something of people saying things that you would say when things go red. Look at the Qs. Are the Qs going red as well? The Qs are barely, Qs are 3 cents away from going red. Yeah, there you go. It only took 15 minutes for everything to collapse. There's Nvidia. Below 130. Oh my gosh, dude. This is why option sellers win, bro. Whoever bought those 140 calls yesterday, those have gone to zero. And the option seller continues to collect the premium. Yeah, the 1030 slam should be the 950 slam now. That's basically what's happening every day. 1030 to 950. You can't handle the truth? That's perfect. That's a good one. A toilet flushing, that's a good one. Submarine diving, that would be a good one. These are some good sounds. Yeah, we got to have some of these sounds in. Flatline on a heartbeat. Yup. The jobless claims were like, I don't think this is the reason why the market's tanking, because in the pre-markets, they didn't react to that. And number two, like the market wants there to be less jobs so that inflation comes down. So I kind of think there's a bullish angle towards it. Sucks that Rocket Lab has to report on a day like this. I mean, if we continue to go red with the weakness Rocket Lab has already had, they've got to really crush it to not continue to have that weakness. But it is what it is. Sometimes you end up reporting on these types of days. Rocket Lab right here, 2150, that's up 1.4%. But yeah, in terms of the jobs claims, I do think that the market doesn't necessarily think it's the worst thing in the world. Now, granted, if they care less about inflation and they care more about unemployment, then yeah, I guess they would tank on that news. But so far, they've cared a lot about unemployment or about inflation. I mean, okay, so here's a question: if you're a Rocket Lab shareholder in the chat, would you be upset if this thing tanks 10, 15%? If this thing is below 20, like, would you actually be upset, or would you be excited for that opportunity? I know a lot of shareholders are a bit annoyed that it's down from 30 to 21. But if you're going to, my philosophy is if you're going to take it down, you might as well take it down. And for Hood, they took it down to 55 and I was patient. I was like, let's give us 45. We got to 45. That's when I bought the dip and I'm pretty happy with that dip buy. So if you're deep in Rocket Lab, I mean, if you get $15 and you know the thesis on the stock, like, would you really be upset adding at 15? I wouldn't. I mean, as a relatively new shareholder, I feel like that would be a great entry. But I guess it depends why they tank as well. If they delay Neutron, that's probably a big reason. But if they delay Neutron, you got 2 years to load up on that. And so, yeah, I don't think we're going to get a massive delay, but I guess we're going to see after the bell what they say. Right here is up 3.7%. Coinbase is up 1.2%. Lowe's is up 0.39%. The indices are still slightly green. Where's the S&P? The S&P holding on by about 0.25% to its green. Nvidia slight rebound, 128 to 130.8. Buyer stepped in at that 128 level. SMCI as well, it was down 10%. Now it's down 7%. And you got the Qs that are still holding on to their green, along with the S&P. Bitcoin as well at 85,000. Marathon up 14% is wild. I guess those earnings were just that good. Because usually when the market's tanking, Bitcoin miners get hit the worst. But Marathon from 12 to $14, up 12.2%. Currently here right now. B Worthy says, I would not be upset if there's a 10% drop on Rocket Lab. I would be upset if it's 30%. It all depends on if there's a significant Jimmy Neutron delay. Dude, if they named it Jimmy, like, it would be amazing, dude. Like, I feel like there's a world in which they could partner with Jimmy Neutron and that IP would be so cool. Like, even if they did like a commercial, because Jimmy Neutron was like the best show ever when I was growing up. Like that's one of the few shows I remember. Google's at 171. What is happening? Is search dead? Do people not use Google or YouTube anymore? Like, this is insanity right now. Their forward estimates must be below 15 for fiscal year 2026. In the morning, it was 16.5, down another couple percent. That probably gets you below 16. Google, what is that? It's insane, bro. That's 171 right here on Google, down about 1%. But yeah, in terms of Jimmy Neutron, dude, if they partnered and they made a commercial with like Nickelodeon and it had to do with Rocket Lab and they got the Jimmy Neutron character to like be on a Rocket Lab rocket, I feel like that would be so cool. It could go so viral. It would be so nostalgic for so many people that used to watch the cartoon that it would be a dope thing. Now, granted, Peter Beck is from New Zealand, so I don't know if he actually watched Jimmy Neutron going up. I think it was more of an American show, but still, that would be so cool to see if that happen. Dude, Google, what the hell is going on, bro? Chris says Google needs to cut their dividend and boost the buybacks. I don't think it's that, though. I think there's just a narrative thing, right? Like this happened overnight. This is not. I feel like what? They need to buy another couple $1 billion worth of share. Would the street really change their narrative there? Like, this is something else that's going on with Google that the street's upset about. And I don't know if it's the app loving thing with the ad tech stuff. That seems to be very short-sighted. They just got a $2.5 billion cloud contract from Salesforce. It's not like cloud is not growing. For those that are saying Google is dead, sure. But if you look at their web traffic, they get 88 billion visits a month. YouTube gets 35 billion visits. That's not slowing down. I mean, I fed into that narrative a year ago as well that ChatGPT is taking their lunch. I don't think that's the case. Are they losing some market share to LLMs? Yes. But generative AI overviews and the advertising inside of those generative AI overviews inside of the core Google product are growing. They're up 14% year over year. Like that to me is not an argument that LLMs are stealing Google's lunch. Like if that's the narrative, which was the narrative back in 2023 and for the far majority of 2024, I think that's a narrative that you buy the dip on. Unless there's data that I'm not looking at and truly their search business is dying because of LLMs, which I just don't think is happening. But there's got to be something else that's happening. You know what I think is happening? I think the Max 7 is just getting re-rated, and Google is taking it on the chin with the rest of the Max 7, along with Tesla, Amazon, Nvidia. Look at this: Nvidia 129, Amazon 214, Google 173, Meta 670, Tesla 288, Apple 240, Microsoft 401. Apple and Microsoft barely green. The rest of them all red on the day. Yeah, dude, YouTube just announced 1 billion people per month watch video podcasts. YouTube is growing like crazy. They have over 100 million premium subscribers. Like Willow with freaking quantum computing. I mean, there's too many catalysts. They got the Waymo catalyst that's ramping up in June in Austin. Like, I don't know what the market's upset about, but it can't be that the business is dying, because that's just not the case. I mean, they have the fastest growing cloud business. They have the smallest cloud business compared to Azure and AWS, but it's the fastest growing at 35%. I don't know how we fade this. 15 times earnings 2026. Really? I just feel like that is cheap. And maybe it's cheap for a reason, but it doesn't feel like it's cheap for a good reason. Nvidia 128.6. If they're going to give us the dip, give us below 125. I don't think they're going to give us below 125, but if they are going to give us a dip, they might as well. Nvidia right here now taking a break. Pretty much everything taking a break. Pound here going red. Yep, everything. 950 crash, baby. Every day, like clockwork. Going red. Could you imagine this happens for the next 10 months? Every day, like pre-markets were excited. Then at 950, it's like, well, guys, we're red again. Like, but then we get enough green to get like our hopes up for the next day, which is what's been happening in the after hours for the past couple of days. And then pre-markets are green. We're like, all right, cool. After hours is green. Overnight markets were green. Pre-markets are green. Now we just need the market to be green. And then at 950, it's like, yeah, we were just kidding around. We can go back to being red. Granted, it's February and we have 1 day left of February. We don't have a leap year this year. So is anyone here born on a leap year? Does anyone have a birthday on a leap year? I always think that was the craziest thing ever. If you were born on like February 29th. I haven't met too many people that have that birthday, but it's always cool when you see someone who does. But we have 2 days left of February, today and tomorrow, and then we're done. And then maybe we can get into some seasonal excitement going into March. Look at that. Robinhood about to go below 50, dude. It was such a tease at 52. Such a freaking tease. It was never going to hold that level. It was just not going to hold that level. Mitch says, my mom is a leap year baby. Pag says, my uncle. Leapy says, my godchild. Wow. Corey says, one of my uncles. A decent amount of you guys have leap years. CT says, I'm born on the 28th. All right. Happy pre-birthday to you, CT. We will wish you a proper happy birthday tomorrow, but I love it. I don't know that many people that are born in February, to be honest, dude. Like most of the birthdays from people that I know, it's in the summer or it's in the September through December time. It's like either like June, July, August, or September through December. And a lot of them are really in October. But I don't know a ton of people that have birthdays in January and in February. Actually, one of my friends is New Year's. Yeah, he's like literally January 1st. But outside of that, not too many. Salesforce right here down 4.3%. Nvidia down 2.9, 127. Palantir 88.93 was an absolute tease. Whoever bought Palantir 93 this morning is probably annoyed as hell, dude. Like, and that's bad because now they're not going to feel comfortable buying tomorrow on the next breakout because you just are afraid that the thing's going to collapse within 10 minutes. So it's just like it's turning off buyers from stepping in if they don't think there's an actual trend that's going to hold up. And then you got Apple that just goes red 240.3 here right now. My birthday is October. My birthday is October. So I'm in that Scorpio world. Matt says my late brother's birthday today. Shout out to Matt. Rest in peace to your late brother, and happy late birthday to him today on February 27th. I'm a Scorpio. Yes, I'm a Scorpio. Everyone wants to judge as soon as you say you're a Scorpio, but it's like Scorpios are mysterious, bro. Like it's like everyone thinks Scorpios are weird. In my opinion, we're enigmatic, we're mysterious, we're cool, we have personality. Most people would say, we're insane. You could say that as well. Especially girls, bro. Girls think Scorpios are horrible. Like whenever you say you're a Scorpio sign to them, they're just like, "Oh, you're a Scorpio." And I'm like, "Yes, is that an issue?" And they just roll their eyes. I'm like, "Okay, so I see you're not a fan of Scorpios." But I think Scorpios are the most exciting. They're the most passionate when it comes to like stuff they care about. Wow, why is Nvidia going down? Why doesn't it just go up? Those were good numbers. 126, bro. Holy freaking crap. Whoever sold calls on Nvidia, you're winning today. You are winning. Goodness, dude. All right, give us below 125, dude. Give us below 125. Chris says, call me. All right. Chris, I'm gonna keep sending you the StreamYard link. That's easier because that way you can just join right through that. So I'll send it to you in your WhatsApp. And then we'll call Steve after. We'll get his thoughts on Nvidia. I imagine Steve is definitely going to be thinking of buying this dip as well. Amit, you said you would welcome the dip. Yeah, I said I would welcome it. I didn't say I would welcome it with open arms. They're going to have to knock on the door a little bit before I come to the door. They might have to ring the bell a little bit, but they finally keep knocking enough and it's below 125. Then it's like, all right, fine. But like, do they have to be so abrupt about it? Can't you like give us a little bit of green first? No, in all seriousness, dude, like if they're going to dip it, then send it down, dude. Send it all the way down at this point. Like, don't tease us with 127, 128. Like at this point, just give us 120. Let people actually buy the dip. But I am surprised that it's happening this quick. You would think we would have a little bit of green, but nope. Within the first 5 minutes, we reversed, and now we are down 4%. This has to be a market sentiment thing, dude. This is not an Nvidia thing. No one looks at those Nvidia earnings and says, "I'm selling it." These are algos. These are money managers that are scared of potentially being over allocated to tech. This is something else going on in the macro. Tariff fears, whatever it may be. I don't think it's those Nvidia earnings themselves were that bad. Chris, good morning. How are you?
Not good, man. Not good. Watching this market, just all this red. I mean, I have cash on the side, but dude, it's investing with Trump every day coming out and just basically saying tariff and then not tariff. Bro, I'm not gonna lie. I kind of wish Biden was back. Sleepy Joe, at least Sleepy Joe just slept.
Hey, Chris. Hold on, Chris. I'm gonna say what all the comments are about to say, but you voted for this.
Yeah,
you voted for this.
Yeah, so. No, I did, man. It's just when it comes to the market, I don't know what to say to this guy. I understand that what he's doing.
Okay, let's do this. Let's say for one day you are Trump's political consultant about the economy at the intersection of politics. How would you respectfully tell our president how to navigate this current economic climate?
Pick your battles, man. Don't fight everyone all at one time. Like, what you're going to do is get the Republicans slaughtered in the midterms if you keep up with this. And then whatever benefit that you thought you were going to have is going to end up crumbling. And then what's going to end up happening is now the Democrats are going to dominate the Senate and the House. And then you're basically going to be sitting there a lame duck, So if you want these policies to work out, you got to pick and choose. Like, this thing with Mexico, I understand Mexico and Canada, you're going to tariff them. And then you're like, oh no, they're going to work with me. And then it's like within less than like 2 weeks, it's like, oh, you know what? We're going to put these back on again because you didn't do enough. And it's like, you can't get countries to move like in such a short time frame. The other thing is you're publicly calling out our allies. Or, even if you think that they're unfair, you do it behind closed doors through Marco Rubio. I mean, you want to know something? I think the administration is going to destroy itself because there's going to be a point where the cabinet people are going to say, look, I can't deal with this bullshit either. Like, imagine right now you're saying one thing and then you're being undermined within like 24 hours by a tweet. You're not even being consulted, and then you got to cover for this guy. You know, that's not healthy. Like, I know that right now Rubio is doing his best to kind of, like, oh no, I like, this is what Trump wants, and this is what blah blah blah. But Rubio's out there basically putting out fires, and I don't know how eventually he's gonna get frustrated by putting on fires, and he's just gonna say, you know what, I don't want to deal with this shit.
What do you think about these tariffs, bro? This EU stuff, Canada stuff. Like, do you think the market believes it or not?
See, that's the problem. You don't know because he rolls them back 2 days later, So you can't even tell. You can't even tell. The problem is all these businesses that do like, like have business presences outside the country, they don't know what to do. Because right now, imagine right now, you're about to, you make widgets and you need your widgets and you sell them at a certain price in the market, right? So you have to basically figure out what your costs are going to be ahead of time. So you put an order in for your widgets. The minute that widget is done, completed in China and is about to be shipped out, Trump's like, I'm going to put a 25% tariff. And now you have to kind of like figure out like how you're going to basically, get your buyer to buy at a higher price, right? For a widget that's going to cost you higher, but you already have a fixed contract with that guy. So it's like, it's causing all sorts of like downstream chain effects. I think the best quote that I got from somebody said, look, Trump is trying to intentionally crash the economy so that this way inflation goes down faster and this way the national debt gets balanced quicker, right? And the analogy that I got was really funny. It's good. It's like Trump is trying to control inflation the same way it's like cooking a steak. You don't cook a steak by burning down your house. Even if it works, it's not a fucking right way to do it. So, I mean, the damage that's being done is being it. Hopefully, it's something that we can figure out. But this literally, you're playing into the hands of the Chinese right now, because the Chinese, every time you step away from things, the Chinese come in and say, look, at least we're not the Americans. The Americans, you can't trust them. Every time a political shift happens, they become dicks. Like, if you think so, now everyone's like, oh, maybe China's right. Maybe we don't want to deal with the US. There's no stability there. They're fighting each other all the time. They're investigating each other all the time. They don't even believe each other's votes anymore. They're saying that, their own people are corrupt. I mean, bro, this is like Banana Republic territory.
Well, do you think so obviously there's the Trump angle to why the market's tanking, but do you think what is the macro reason besides Trump? Because I think this is a market sentiment thing. I shared this in the morning and you can see it right now, but these forward estimates for the Max 7 are insanity. Why do you think the Max 7 are being discounted like this?
It's instability, man. Like right now, did you see this morning? I think there's two main headlines that just came out that probably is screwing over big tech. One is Benioff came out and basically said that the big cloud providers, they're just spending money like endlessly, and there's not going to be any real value.
Wait, hold on. Benioff said that?
Yeah, you didn't see it? Look it up. It said Benioff, look it up, and said that they're spending money that basically is not generating any value.
Huh.
Look it up. Type it in. I'll put it on the screen. Let people see it. So when you have a big tech CEO, especially after he missed his numbers, comes out and says something like that, it's like, oh my God, like, what the hell? So that's one thing that's probably causing it. Nadella said the same thing not too long ago, so that's another problem, right? And so people are just dealing with it.
What do you think is going on with Google? What's happening here?
Google is dealing with that too, because they're spending like 75 billion on AI, and right now people are questioning, like, wait a second, is there going to be tangible value that's going to be generated in the future? And I mean, they're saying yes, but we don't know. So it brings a lot of uncertainty into the markets, and that uncertainty is not something that people want to deal with. The other thing is they're being invested. Did you hear about this thing in the morning that now they're all the big tech, all their guys are being called in by the US, some kind of investigative committee on like free speech violations, like working with other countries to censor people.
I mean, they're all going to be sitting and they're going to have to take questions from Elizabeth Warren and all that stuff.
Yeah. Well, I don't know about Elizabeth Warren because that's the Senate, but the House, I think Jim Jordan was leading the one. So let me see, Jim Jordan, big tech. It was I just saw it this morning. Yeah, U.S. demands EU antitrust chief clarify rules, and then there was another one that literally, it's like basically the freaking news cycle is running the market right now. You know, you see crazy shit come around, and it's like, and you're dealing with it. It's
All
pretty
right, so
nuts.
how are you positioning? Are you buying the dip? Are you hedging? Like, what do you?
I already bought the dip too many times, man. So at this point, I'm just letting my things. I'm not selling anything. I did clear out all my SMCI like short-term stuff because I don't know how the market's gonna be in the next few weeks. So I just cleared those out. I didn't want to I didn't want to deal with that. So I took a little bit of pain on it, and I just called it a day. But the long stuff I'm leaving, and I have a pretty good hedged position, so it's not like something that I'm overly concerned about.
Are you buying the Palantir dip?
Stop, man! You're not gonna.
I'm just asking. I haven't asked you in a while. I don't know if your thoughts have changed in a little bit.
No. It's just, I don't know, man. This market is just rough right now. I'm telling you, it's someone needs to take away Trump's phone. Someone in the administration needs to just take it away for like a week or two. Like, no, Donnie, no more tweeting for a week. Let people actually do some negotiating. Like, you can't be like, okay, you're gonna do this, and before they get a chance to do it, you're like, no, you didn't do what you were supposed to. I'm cutting you off. Like, I get it that you. And what's funny is people keep saying that he's like the master negotiator in chief, and I'm like, bro, if this is how you negotiate, people are.
Well, maybe, to be fair, it's been 2 months, right? I mean, I know all of us are annoyed because our net worths are down in 2 months, but like, we do got to give the guy time. Do you think there's any hope of like giving it a few months, or do you think this is just going down the wrong path completely?
Bro, I'd be surprised right now if there weren't some people in his cabinet being like, look, Donnie, you need to make this market crash so we can buy in. So I'm going to be looking out for them billionaires, be like, all right, when they start buying, be like, bro, I need to join because they know something we don't. But then again, I don't know, man. I'm honestly, I'm getting to the point on it where I hate waking up in the morning. Okay. And the reason why I say that is not because like I have anything fundamentally wrong. It's just, I'm scared of a tweet, and I shouldn't be fucking scared of a tweet.
Dude, my mom said the same thing yesterday.
Huh?
My mom said the same thing. She's like, yeah, I don't want to look at the portfolio anymore. She's getting to that point.
No, I don't care about the portfolio moving up and down like the market's supposed to do its thing. Like, I could deal with that. That's not a hard thing. The problem is me as being somewhat of an analyst trying to figure out like, okay, what is the world going to look like a year, 2 years from now so I can invest? I can't, because anytime I think about it, I'm like, oh, okay, look, this guy's going to come out and say some shit. And so now it makes you not want to put money into the market,
Yeah.
Because now there's a lot of uncertainty. I mean, do you feel comfortable waking up in the morning and looking at your screen and being like just dreading that there's going to be a fucking tweet out there that fucks over your portfolio?
Yeah, and it's also I'm not trusting any of the pre-market green because all of it by 9:50 goes away, and the reason it goes away is because something like this, which I'm showing on the screen, Trump tweets at 8:45. Yeah. And then boom, you got March 4th tariffs, and all that pre-market green goes to shit.
Yeah. I mean, I'm telling you, this is not the way that I don't know the logic behind it. I really don't. I'm trying to figure out, maybe this is some kind of like 4D strategy that we're all like, we don't know about. But I mean, it's
granted, Kris, you knew who Trump was. I mean, you lived through 2017. You knew that this guy would send out a tweet every day. So it's not like you didn't know this would happen. Right.
I thought that he would at least moderate somewhat, try to control this economy, Like, I mean, dude, if this is America's golden age, I ain't seeing it,
Yeah, well, at least not 2 months in. I think we got to be a bit more patient, but I agree. First 2 months have been.
Yeah. So, I mean, at this point, all I can say is people are probably going to rotate to like defensive stuff because they don't like, if you want to make money in the market, and you don't want to deal with this tweet stuff, you got to just be in companies that don't necessarily are or not impacted by this barrage of up and down, especially when it comes to like foreign trade.
They took Google below 170, Chris.
I know.
They took
I know.
it
What is
below
that?
170. Oh my.
See, the funny thing is, I have cash ready to buy the dip, but I don't want to because I'm like, this fucking guy might tweet tomorrow, like, hey, we're gonna do X and we're gonna do Y, and then the countries on the other side might retaliate, saying, look, you know what? The easiest way we're gonna fuck with Trump is by fucking with their companies and now making America look weak.
Do you think he's actually going to put tariffs on EU 25%? Do you think that actually goes through?
I don't know. No one knows, dude. No one knows. You can't trust this dude. I think, it's funny. Dan Niles, he said, look, I'm going in cash. I don't know where to put my money. I was like, all right. So, did you see that?
Yeah, he
like,
said, screw
it's
this.
crazy. Yeah. Buffett's doing the same thing. Buffett's like, I don't know, bro. I'm just going to raise cash. I don't like, oh God.
That is kind of. I mean, part of the reason that you and I like New and Bank and Grab is because they kind of don't have to deal with Trump's tweets, right?
Yeah, they're outside of the. But even they have issues because they report in dollars.
Yeah.
So the foreign exchanges are up and down all the time too. So I'm telling you, this is the time where, number one, the valuations of the markets are somewhat frothy. Right. So that's one major red flag. So when you're investing, you got to be very specific on who you're investing in. I do think that this is creating a ton of opportunities. Do me a favor. Can you look up Take Two Entertainment?
Yeah. TTWO, I think. Yeah.
Okay. They're steady. All right. I'm hoping that this one crashes. I don't know why, but I hope this crashes
because they have Auto, right?
Yeah, because they have Grand Theft Auto coming out, and I'm like, bro, I know at least with Grand Theft Auto, no tariffs, they're gonna do well.
Oh my gosh! All right, so let's do we'll get Chris out of here in like 5 minutes, but everyone put some tickers in the chat. I'm gonna just give you a random ticker, Chris, and give me your 30-second opinion on the ticker. So I'll start off with Nvidia. What do you think?
Nvidia is a great company. They're doing crazy things. The only problem is the sentiment on AI spend is starting to sour a little bit because a lot of high profile people are coming out and saying, look, AI is great, but it's not gonna do as big of a thing as we're thinking. So I think a lot of people are wondering, is Nvidia the next Cisco? And so they're taking that into consideration. Even though demand is really, really strong going into 2025 and 26, people are asking themselves, well, what about after that? What's going to happen? Should we be giving it a high multiple based on that? So just because your numbers look good today doesn't mean they're going to look good tomorrow. So I think a lot of people are just asking themselves like, hey, this is a cyclical business, and what is Nvidia doing outside of their core products right now to keep value this high? So if the cycle ends in AI spend, or if AI spend goes down, the one that's most impacted is going to be Nvidia, who's been the biggest beneficiary. So people are basically saying, you know what, I'm going to be risk off a little bit and not have as much of exposure to Nvidia. So right now things might be good, but you don't know if it's going to be good next year. And especially if hyperscalers are, start talking about scaling back spend, Nvidia could retrace down much, much lower.
Okay, Rocket Lab.
I think Rocket Lab's a good company. I just I don't have an opinion on it. I haven't done enough research on it to give a good basis on it. So I think it's a good company, great CEO, very inspiring CEO. So people who are in Rocket Lab, congratulations. You've got a good company. I just don't know much about it though.
Meta.
Bro, you don't ever bet against Zuck. Zuck will figure things out. So the dip on Meta, I don't see anyone replacing Meta anytime soon. And they actually have real AI use cases that they're utilizing to generate them even bigger and bigger returns. So,
I imagine the same thing you feel about Amazon.
Yeah, Amazon's the same thing. Now, what's funny is we're hearing completely opposite stuff from what Benioff is saying, which is Andy Jassy is saying the only thing that is basically like slowing us down is we don't have enough compute because new companies are doing a ton of work. They're doing a ton of things, and we are inundated with demand, which is the same thing that Google said on their call. So now it's like, who do you believe? Do you believe Benioff? Do you believe Nadella? Do you believe Pichai? Do you believe Jassy?
Yeah, I mean, when he said that yesterday, that they are a supply constraint, not demand constraint, to me, that just means cha-ching, cha-ching for NVIDIA. But again,
Yeah.
it seems like it'll take time. All right, last one for you, and then we'll get you out of here. Tesla, current thoughts at 280. When do you get excited to buy this dip?
When Elon resigns from Doge.
Okay, there you go.
I mean, here's a question to you. Do you think that Tesla demand is going to be Jesus, woman, stop calling me. Do you think Tesla demand is going to shrink because of Elon's participation in Doge?
I think the story is about FSD and robotics, but sure, it could. Damn, dude, she really wants to get your attention, bro.
My biggest fear here is that all these people vandalizing Teslas and doing all this stuff, it's going to make consumers second guess buying a Tesla. Because even if you like Elon and the company, if you can't park your car because motherfuckers are like throwing paint on it and, you know, like hitting your windshield and, you know, calling you a Nazi and all this other stuff, bro, not a lot of people, as at least the ones I know, want to deal with that. You know, even if you like the car, bro, the fact that you can't park it safely because someone will take a hammer to it, it does, like, you know, ring in the back of your head, like, hey, maybe I don't want to deal with this. So the brand value is definitely taking a huge hit. And I think eventually the sales numbers are going to reflect that. So the other thing is, if you look at Europe sales are down significantly. US sales are down. Well, I don't know if US sales are down, but US is having these issues right now. So I think a lot of that might end up playing into future earnings. So we'll see what happens.
All right, there we go.
And
Chris
not to
Twitter,
mention, demand for EVs is actually cratering also. So that's like, even outside of this whole political thing with Elon, demand for EVs is slowing down significantly. So, you know, like, naturally you're going to see that come down. Now, some people will say, well, what about the robot? What about all these other businesses? And I'm asking myself, I'm like, yeah, but like, how far away is that, you know, before it actually generates some real tangible value? So, I mean, I will say this, for people who have some cash on the side, this is probably a good time to start dollar cost averaging into your favorite names that you know are undervalued. So for me right now, that would be Google, right? Now, my every part of my soul is saying, don't buy it, Chris, because it's just going to keep dipping. It's going to keep dipping. And you have to fight that urge, because you know, like, holy shit, look, the RSI is basically crashed. We're in total fear mode on the fear and greed index, right? You're seeing this is a great company fundamentally. All it is, it's technically sold off. So you have to fight that fear and you have to fight that urge to basically, like, not buy and buy anyway, you know?
Yeah, extreme fear at 20, dude. I mean, I feel like we're not going to be here at the end of February, but then, or the end of March, but who knows, right? It comes down
Yeah,
to
exactly. This is where you really have to just dig down and deep and ask yourself, is there anything fundamentally that's changed with the company itself that I'm investing in? And if that's not the case, and this is just the market being irrational, bro, that's the best time to buy, because the market is giving you a heavy discount, you know?
Yeah.
So if there's a reason why the company is going down, you should definitely not buy it. But if it's the entire market that's going down, that means that people are throwing out the baby with the bathwater, in which case there's a higher probability that you're going to get a recovery.
Yeah. And look, that's what I'm thinking on Tesla as well. I do agree there's some political narrative shifts that are hurting Teslas, and you got some people putting logos of horrible things on the cars. But in general, if you think robotics and FSD is coming sooner than later, that's a personal decision. Do you think it's coming or not? Then Tesla's at a way better price than it was at 487.
Yeah.
Even if it is still extended, right?
No, of course, 100%. And I think what's the guy from Dumb Money? I forgot his name.
Chris Camillo. Yeah.
I think he's loaded to the hilt with Tesla.
Yeah.
Right? Because he believes the robots thing as being a fourth wave of, like, innovation that's just gonna knock it out of the park. And I think he went pretty heavy on this thing. So
yeah.
You know, so yeah, like I said, if you believe in the company that you have some cash on the side, just swallow, close your nose, swallow your pride, and buy a little bit.
All right, Chris, thank you. We will talk to you later, Chris.
I'm gonna go buy some Google Leaps. Bye.
All right, bye-bye. All right, we got a market that's still red. I bought 10 shares of Nvidia at 125.70 while Kris was talking, 125.63 to be exact. So I don't know. We'll see if that was the low for the day. 125.2 was the absolute low for the day, or if we retouch those levels. 127 on Nvidia. Tesla as well at 288. I'm about to buy 10 shares of Tesla as well, dude. I've resisted buying the Tesla dip for a while. It's a very small nibble with these 10 shares, but we're doing it. There we go. 10 shares, 288.9. This thing's about to go to freaking 270, but we at least got that in. So very small nibble, nothing too crazy. I am very hesitant only because I do think this price action going into Q1 is going to be nasty, given their auto business is not doing that well. But at some point you have to buy this thing. So at least if you're long. So there you go. Small 10 shares on Tesla, small 10 shares on Nvidia for today. I would sell Nvidia covered calls, but the covered call premiums have died. So we're gonna have to wait to sell some good covered calls. And then that's it. Earlier in the week, I bought Grab, I bought Hood, I bought Rock Lab, I bought SoFi. Today I bought Nvidia and Tesla. Only thing I didn't buy yet is Google. Eventually, I think we'll have to end up buying that one as well. But there you go. That's what we got. Dude, I agree with you guys. I think Tesla's going. I think Tesla's going to 270. Like the chart looks disgusting. Probably gets into the 270s after a bad Q1. I get it, but at some point, dude, it's down from 380. Like the whole point of DCA is to literally average your dollar cost, and so I feel like at 288 at least we'll begin the process of doing it. I've been pretty patient, dude. Tesla went from 350 to literally 288 for the past 2 weeks. I have not bought it, so at least now let's see if that helps a bit. Dude, if Tesla, so I have 50 shares of Tesla, right? Nothing too crazy. But if Tesla really does get into the low 200s, as much as it would suck, I my conviction on Tesla is growing more and more and more. I mean, that would be one of the best opportunities. And if Nvidia, I mean, I don't know, dude, what I would have to sell. If Nvidia pumps, who knows if I do the Nvidia for Tesla swap. I mean, it would have to get really stupid because I wouldn't want to swap Nvidia for it. I would probably try to get rid of a bunch of other stuff to get more Tesla. But I mean, if we really go into the low 200s right before FSD takes off, right before robotics becomes a thing, I just think that becomes an opportunity. That becomes an opportunity that's just hard to ignore. Speaking of robotics, by the way, for those that didn't see the video yesterday, we did get a new video yesterday from Figure, and they are showing real robots doing real things in their warehouse when it comes to dealing with packages. I believe this is only going to get bigger and bigger for the overall industry. This is obviously very bullish for Nvidia because Nvidia chips are the inference training used for these robots, but this means that Tesla's TAM is only growing as well. So Elon said they're going to do 50,000 robots next year, 500,000 in 2027. Now, maybe Elon's a bit ambitious. I think Figure has a goal of just 1,000 robots by 2025. So Tesla wants to do 50x that for next year. I don't know if that's going to play out, but if it does, I do think this stock will be seen as a bit more undervalued. Palantir now back up to 89.80. We got Hood coming in at 51. A little bit of reversal across the board. Overall, we are still red. Nvidia red, but back at 128. Tesla at 290. Rock Lab 2161. Celsius gave up 10% yesterday. Now it's up 1%. SMCI still down 10%. Palantir 89.50, and the S&P is green on the day. Look at PAYS. What is this one? Pay sign. Yeah, this is a small cap. This is a $145 million company. I do not know this one, but they are down 2% currently right now. Amazon as well, green. Amazon went to 204 a couple days ago, now back at 214. So you got a little bit of small reversal there. Grab is up. Yeah, I mean, look, Kris is right. Grab is definitely affected by the foreign exchange, by the US dollar, but they're not affected by Trump saying some crazy stuff domestically, right? Like at the end of the day, their business obviously has international implications, but as long as Southeast Asians are not in a recession, they can afford to spend on Grab. And, there will always be different implications across the world, but as long as that region doesn't get into a recession, which from my research in the region is booming right now, Hopefully Grab has the ability to capitalize. And again, my thesis on this one, at least for the next 6 months as well, is they have too much cash, and I think they're going to have a big merger. I think they're spending like crazy to show their competitors that it's time to merge, because you're not going to get margins. They're not going to get margins, but they can survive because they have $6 billion in cash, but their competitors cannot survive. I mean, the small startup that's trying to eat away at their margins is just annoying for Grab. They'd rather get acquired than actually go head to head with them. So I think in the next 6 months, we see them do something with that $6 billion. And if they do nothing, I think they're just going to buy back a couple billion of their stock. But if that happens, then hopefully this one gets re-rated as well. Rocket Lab 2145. Meta goes red at 672. Palantir 89.60 on the day. TMDX has earnings today as well. I like this one. I can't buy it because I don't know enough about them, dude. I really don't. I picked my small cap already, and it was Grab. I know TMDX is a much smaller small cap than Grab, but I like it. I like the story. I like the thesis. I like the founder. I think he's super ambitious. I just don't know enough about them to take the gamble. But this earnings will be important because last earnings they fell by 50%. So this is going to be one of those earnings where they need to regain a lot of trust, and we'll see today after hours how they execute here. Norwegian at earnings this morning, really? I didn't even know that. They're down 2.4%. Little recovery here. I didn't even know they had earnings today. Okay, we'll try to get those numbers. But Norwegian had earnings today. Carnival Cruise had earnings about 2 weeks ago. Norwegian right here down about 2%. Whereas Neo is that's up 5%. Oscar Health, I know a lot of you guys have been thinking about this one. It is down 1.34%. And then Tesla right here currently at 292. Bezos said, just took a screenshot of Tesla being green because I forgot what that looks like. Yeah, you're gonna have to cherish the slight bit of green we have on these days for Tesla. How many people in the chat are OG Tesla? Like, you've been in this name since like before 2020. How many of the people here like got into this name before it was cool to get into this name? I'm curious. I'm actually one of those people, by the way. I got in 2019 before it 20x'd. I just sold on the first double because you guys know the story, right? My friend, he was like, yo, like he was trying to teach me about the market. He was like, yo, if you double your money, you take your profits, yada, yada. And I was like, oh yeah, you're right. I should. So I turned like 500 into 1,000. And I was like, well, I should take my profit. And then I'm seeing Tesla go up like 30% every week after that in 2020. And I'm like, I'm not listening to that guy anymore. That guy was stupid. Even though he's probably right, he was stupid. Should have hold on to this damn thing. Like I would, dude. If I had my shares, I still have the Robinhood buy and sell orders from 2019. If I had held on to those shares, even that small amount of money would have be up 20x. It's been crazy if I actually held on. Henry's from 2020. We got Loris from 2019. Frank 2020. Andy from 2019. All right, we got a bunch of you. Someone said my cost basis is $12. Goodness, dude. Yeah, we got some people in from the early days. Are you still friends? Yeah, he's still one of my good friends, dude. He was one of my fraternity brothers. So we don't talk as much, obviously. He just got married a couple. I was at his marriage. I was just in Virginia. I was at his marriage. But he doesn't care that much about the markets, dude. That's the other thing. A couple of my friends back when I was in senior year of high school, they or not high school, at college, they like we started talking about markets because I started getting into it and they started getting into it. And then, they stopped caring. And I remember I would text them stuff during COVID when we were in the pandemic. I would like text them like different headlines I was seeing about different stocks, and they wouldn't care. And I was like, oh, these guys, like, it was a fad for them. Like, if I'm going to, care about this, I'm gonna have to care about this by myself because my friends don't care. And then we met up at his bachelor trip in Virginia in April. And I tried talking about markets with them and they just like didn't care. And I'm like, wow, 4 years later, you guys don't give a shit. Like, they wanted to talk about anything besides the stock market. And I was like, damn, this is like, it sucks, bro. This is why I think people come to the stream, right? And like are on X, because you just don't have people to talk to. That's one of the cool things about the meetups that we've been doing. It's like people actually can connect with other people that care about the markets. It's just so rare to find those people. It is so freaking rare. Well, okay, so Steve, he just texted me. He can't pick up right now. He'll be on the market close. He's in a bunch of meetings right now. So he just texted me. He can't get on right now. But on the market close, we'll call him and we'll get his thoughts as well. And I mean, the TLDR on what Steve thinks, I was talking to him last night, is he's getting ready to liquidate a lot of positions to buy more NVIDIA. He might end up even selling a Square to get more NVIDIA. So he was very bullish on the quarter and thinks that this quarter only gets better and better. I got no one to talk to. My friends are clueless. Yeah, it's just like people just don't like. I wouldn't even say people are clueless. They just like they're not inspired enough to like look into an income statement or to like read about what Jcal is thinking. Like it's just like when you're in the markets, you're in the markets. It's like sports, right? Like if you care about the NBA, you care about all these different storylines. By the way, Luka against the Mavericks. My goodness, I cannot believe the Lakers got away with that trade, but they got away with it, and so. Shout out to the Lakers. They're making the NBA exciting again. But when you care about basketball, you care about every storyline in basketball. When you care about the market, you care about every storyline. And if you don't care about every storyline, I mean, you're probably just not going to care that much about the broader markets. How many positions does Steve have? We would all like to know, dude. Steve owns like, I would say more than 100 stocks. I'll ask him today, but he is loaded up on just like, even if he has 5 shares of a stock, he just has so many different positions in his portfolio. Okay, let's get an update. I'll try to get some other headlines on Nvidia and see what we got going on here. Let's get an update on some of the tariffs and macro that we're seeing, and then we'll keep going from there.
This wasn't California wildfires, and it wasn't the federal government layoffs. So it could speak to some underlying weakness or confidence issues developing from companies. The biggest, for instance, Carl, increase in jobless claims, Kentucky, Tennessee, Washington, Michigan, and Minnesota. Biggest decrease was California, Pennsylvania. It could be linked to a slowdown in activity. 1 week does not a trend make. We're going to have to keep seeing it, but it's notable because there's been this big downtrend in jobless claims, which kind of made it feel like everything was okay in the labor market.
Yeah, interesting. People definitely dissecting the claims by state. We haven't really seen a spike in either Virginia or Maryland, which makes some wonder whether or not we're feeling yet the effects of any federal workforce layoffs. We'll see.
We'll see. I mean, they said that that's not really in it yet. I will note that today's data, and we got the second look at fourth quarter GDP as well. And usually that's kind of, it's old and it was unchanged, but what's in there, the details. One interesting point I'll just highlight, core PCE in that fourth quarter data was revised higher. That's a little troubling.
We get PCE on Friday, by the way, guys. I think tomorrow, if I'm not wrong. So if that data is not good, along with it being a Friday, we might have a little bit of pain tomorrow as well.
0.7% now instead of 2.5 for core PCE. We'll get the PCE numbers for the last month tomorrow, which will be fresher. However, I highlight it, David, because it presents a little bit of a predicament. If the Fed wants to say, we're on hold because we want to make sure disinflation is happening, they can point to this and say, look, some of these numbers are being revised up. We don't want to lose track. But if they want to say we want to cut rates because the labor market is starting to show signs of cracks and weakening, they can look at jobless claims. Now, I'm not saying these two numbers necessarily are indicative of the trends, but they could be. And that will be the Fed's conflict, which is, are they going to care more about weakening jobs, or are they going to care more about lack of progress on disinflation? Hopefully, we'll continue to get strong jobs and we'll continue to get disinflation. But today's setup could be an interesting dilemma for the Fed.
Well, and then later on, I mean, they're coming close now. 20% tariffs on everything coming from China and 25% from Mexico and Canada. That's not exactly helping the inflation, helping the fight against inflation.
No, but the question is it a one-off inflationary price shock?
Right.
And is it something the Fed is going to have to respond to? I think a bigger question is, what does it do for demand? You know, if it
Right. You've been
raises
saying
prices
that
for the
lately, and
consumer.
a lot of people have said that for some time, sort of the one-time nature of it, but overall demand. So
Yeah.
what does it do for demand, Sarah?
What does it do for demand? It could hurt demand if we do get a price shock with a lower consumer confidence environment. So far,
Which is exactly what Kris was talking about as well. If we have more tariffs, higher prices, lower consumer confidence, that could be a recipe for disaster. 126.7 on Nvidia, down 3.4%. Grabs holding up at 492. Tesla trying to go a little green at 291. Google still down 1.5. The Google narrative, there's something deeper to it. I think there's something more the street's thinking about. Celsius up a little bit. Supermicro still down 10%. And then Palantir down another 0.5% on the day. Nebis is down another 5%. Pretty much every NVIDIA proxy, along with VST and VRT as well. Yeah, VST down 4%, VRT down 2% from NVIDIA. Do you see the activation of QE possible? No, I don't. Well, okay, so hold on. This is actually nuance. I'm happy you brought this up. I don't think we're at the stage where we're going to engage in quantitative easing yet, which is the Fed buying bonds on the balance sheet and essentially pumping liquidity into the ecosystem. However, like they're not going to do it the way they did in 2021 and 2020. However, M2 money supply, I don't know if people have seen it. It's gone up. M2 supply is up. So take a look at the M2 money supply here right now. This is what we had in 2020, absolutely exploded because of COVID, and we printed just so much damn money. Then it went all the way down to 2022. That's when we started raising. Now look at it tick back up. When money supply goes up, you tend to have, this is not, I mean, part of this is quantitative easing. Not all of it is quantitative easing, but the point is there are some elements of stimulus that the Fed is engaging in to get this money supply to go back up. And that is bullish for stocks. It's bullish for risk on assets. It's actually the reason I think Bitcoin's holding on to this $85,000, $90,000 range. So although we're not going to be engaging in explicit quantitative easing, which is what we did when you see this chart go all the way up here back in 2020, we have done it to an extent. I don't think the Fed is coming to the point where if they see markets fall by like 10%, 15%, they would engage in quantitative easing. Now, maybe Trump would want them to do that, but I think Jcal really wants to kill inflation. And because he wants to kill inflation, if the market tanks and we get a really nasty just 2025, but inflation goes below 2%, as long as the labor market doesn't collapse with it, and it might have to collapse to an extent, but hopefully it's not like recessionary. I don't think Jcal cares about the stock market. I think he cares about inflation going down. Like that is his number one priority. Obviously, he's not going to be the happiest if the market, has a 2022 type of year. But to have a 2022 type of year, you need a full-on recession, in my opinion, which would definitely get inflation to come down. But it would also be a recession, which is the other dual mandate that would not be lived up to by the Fed, which is maximum employment. So there's a lot of nuances they're going to have to manage here. And the easiest way Jcal gets out of this is if inflation comes down on its own because it's propped up by shelter, not because of consumer spending. But consumers not spending as much, not being as confident, as bearish as it is for the broader economy, it is good for inflation taking a bit of a breather. It's just a question of how quick is it going to be for inflation to take that breather. I guess it'll take time. It will take time to see how this plays out. And then you got tariffs, dude. And if you have tariffs, who knows what the hell's going to happen to inflation there. So I don't know. There is a lot. But this is also why the markets are fun, right? There's all these different variables. This is what I mean, right? Like I just talked about 17 different variables to come together. Like this is if you're obsessed with the markets, this is what you care about. Obviously, you can buy and hold, and usually buying and holding solves most of these issues over the long term. But if you do care about kind of the day-to-day impacts of it, there's a lot of variables going back and forth to try to figure out if any of this makes any sense. Let's listen to Deepwater, see what they're saying as well about Nvidia, and if this is an opportunity to buy on the pullback.
Owns Nvidia stocks. Gene, it was good, just not good enough.
Yeah, I would actually say it was great, but not extraordinary. And that's really what this needs to be. And when you think about extraordinary, you got to beat the whisper on what the raise is. And so the whisper was that they're going to raise by a couple billion. They raised by $1 billion for April. As however you said in the setup is the margin guidance. They talked about that being a couple percentage below what the street was at, 1% specifically, at 71% versus 72. And when you have a company like this, that of course expectations are so high, I think in any normal environment would be down. When you talk about margin pressure, I think it's justification for the stock to probably trade lower on the first trading tomorrow morning U.S. time. I expect it probably to be down. My guess is probably around 5% because I think that margin really stung. And it was interesting to look at the stock in the after hours trading. It was up a couple percent up until a few minutes to the last question on the call. And the question was related to tariffs, and specifically is, can you get that ramp in margins? Because I mentioned the negative commentary about April margins. They also said that margins would ramp in the back half of the year, back to the mid 70%. So it goes basically go from 70% to 75%. And can you achieve that with the tariffs situation getting more intense? And the answer was, we don't know. It's a fluid environment and it's not baked into our guidance. And so you quickly saw the stock.
That actually makes sense. I forgot that tariff question, their answer was unknown. And then Trump this morning announces tariffs. Like, if Nvidia doesn't know what's going to happen with tariffs and then Trump doubles down on tariffs, that's actually a pretty logical reason to suggest why Nvidia is down about 4% right now.
Drop a couple percent. It's kind of faded since then. And so what that tells us, that stock reaction, looking at the aftermarket, it really gives insight to what investors are thinking. And what they're thinking, the central question they're asking right now is, can these margins ramp in the back half of the year? And I think that was a little bit in question. One more point that's, I think, critical here is that the setup going into this, one of the central questions, a pressure point, which I would describe it as, was what was the backlog? How long would they be sold out of Blackwell in calendar 25? And last quarter, when they talked about calendar 25, they said it would be several quarters that they'd be sold out of Blackwell. And a lot of investors were focused on, like, what's going to be the new commentary? Are they going to say that it's sold out for the full year of 25? That kind of was the expectation. But they pulled that language from the CFO letter, and surprisingly, no one asked the question on the call. And I think that kind of the absence of that, I think, is also nagging at investors kind of some of their confidence right now. So I just want to highlight, it sounds like I'm really down on Nvidia, but I just want to highlight that there were some headwinds, but there are also some very positive long-term pieces to it that I think will ultimately, even though the stock trades off tomorrow, cause the stock to move higher over the next year and 2 years.
So, Gene, a lack of clarity on how it might do in the coming quarters and coming years, for that matter, 26, 27. I mean, you alluded to the demand for Blackwell, for instance, how strong it's going to be. What is the sense you're getting? How are you reading into all of that?
Well, I think demand is, they said that it's at all-time highs, but ultimately this concept that we're early and you need hardware to build that, I think that is really important. The other piece is that they talked about the performance difference with Blackwell being 2 to 8x better than anything else, any custom chips. So ultimately, I think that this is still very early in terms of where the demand curve could go.
So again, Deepwater, who's been, Gene Munster, who's been covering NVIDIA for a couple of years now, his argument is not that it's a demand problem, it's an uncertainty problem around tariffs. NEO right here, up about 8%. NEO getting some love right now. But if it is a uncertainty issue versus a demand issue, like in terms of, do they have people that want to buy their chips? If it's not about that, it's about uncertainty, I think that's a viable dip. Like, if it was a demand issue, dude, if people were really struggling to gauge if NVIDIA has demand, even I would be scared with my NVIDIA position, because you never want to be the person that's left at the party and the party stops, right? But if the party goes on, because there's plenty of people that want these chips, but no one knows what the hell Trump's going to say and how that's going to affect export controls, etc. Yeah, that could definitely be a reason to create some volatility. NEO is up 8%. I don't know if there's a headline on NEO. They didn't have earnings today, if I'm not wrong. But something's pumping these guys up 8%. Yeah, there's no earnings. If anyone knows the catalyst, let me know in the chat. But in general, NEO's up. Where's BABA? Is China moving today? No, BABA's down. So this is a NEO thing. It's not a China thing. FXI is down as well. Something specific to NEO is getting it to go up right here. Grab, trying to get back to $5. It's at $4.94. A move to 5 would be very exciting if it could hold that level. Tesla 292, Google 170, Meta 673, and then Amazon right here at 214. Yeah, all this uncertainty is definitely freaking out different parts of the market. Is Hood pumping? Are we getting some love on Hood? Yeah, 5150. All right, trying to get, it was at 52 in the morning, went all the way down to 47, back to 50, 5150 right here. NEO's getting a lot of attention on X. Yeah, but they had to have a headline today, something about deliveries or something that's getting NEO to be up right here. But we are seeing a little bit of that pump. Nvidia still 127.24. Again, I bought some shares at 125. That's kind of my level I like. If we get below that level, we'll revisit buying those shares. If not, I guess we'll see. Let's get a little bit more coverage on Nvidia and see what some of the street has to say.
Main question out there is just whether 26 will be a growth year or whether we will have a digestion year. And, I think we'll have visibility to that around the late May, June timeframe, given kind of 12 plus month lead times for Blackwell. And so I think Computex Taiwan will be a very important kind of inflection point where I would expect Jensen will keynote again and that he will offer a view. And I think the moment the market kind of can underwrite another growth year is when the stock can work again. Because quite frankly, you know, the report we got last night was basically in line with buy side expectations. So what we want to see is that accelerating second derivative and really start to see upside to numbers. And, you know, that's going to be the second half of 25 and into 2026.
Gil, you know, what do you think about 26 in particular, as CJ just said? Growth year or digestion year?
This guy, by the way, is a bit more bearish from D.A. Davidson. He's one of the more bearish analysts on Nvidia.
It's far more likely that it's a digestion year. To get to CJ's number, you need to add 80 to $100 billion next year, with at least two of the customers already telling us they're probably at plateauing in terms of CapEx. Microsoft and Amazon have already said it. Google will probably say it by the middle of the year. So without their biggest customers increasing spend probably at all, it's very hard to see them adding 80 to $100 billion of revenue next year.
What about all the geopolitics, the fact that it's been such a sensitive sector and the Trump administration has picked up right where Biden left off in terms of restrictions and adding new ones on China? Gil, do you think that's a big problem or an overhang for the stock and part of the reason it hasn't really done much over the last 6 months?
It's a very big overhang. Jensen Huang visited the White House a couple of weeks ago, and we don't know what he promised. Usually when these CEOs have visited President Trump, they came back with a big announcement. Tim Cook with a big investment. Mark Zuckerberg added Dana White to the board. We don't know what Jensen Huang promised. We also know that there's already legislation that was coming for further restrictions on sales to China. This administration's more likely to be even more severe with those restrictions. And yet the company yesterday said their guidance and their expectations assumes no change to the regulation. So that will continue to be an overhang, at least until we know what the administration intends to do.
And that is creating real uncertainty. So I think that argument is fair. Here's Jensen yesterday actually speaking about the China export controls.
Ask you about your China business. You talked on the call about how the percentage of revenue is half what it was before export controls. Does the emergence of DeepSeek, which some have cast as a workaround, some of those restrictions, does it tell us anything about the effectiveness of export controls?
It's hard to tell whether export control is effective. The thing that I can tell you is this. Our percentage revenues in China before export controls is twice as high as it is now. There's a fair amount of competition in China. Export control and otherwise, Huawei, other companies are quite rigorous and very, very competitive. And so I think that ultimately software finds a way. Maybe that's the easiest way of thinking about it. You know, software is always, whether you're developing software for a supercomputer or software for a personal computer or software for a phone or software for a game console, you ultimately make that software work on whatever system that you're targeting, and you create great software. And so that's kind of the beauty of software engineers. They're incredibly innovative and clever in this way. Our architecture is about the flexibility of software, and which is kind of nice. But ultimately here in the United States, if you look at where we are now compared to what is controlled, GB200 is probably something along the lines of 60 times the token generation rate of what is being shipped in China that's currently export controlled.
Okay.
And so the separation of performance is quite high.
Again, Jensen kind of with a non-answer there, right? He's not really giving an explanation on if export controls are going to matter or not. The fact that he did say he doesn't know to tell if export controls are effective or not, basically is him saying, yeah, the government's trying to get us to not sell to China. We're complying with it. but we can't confirm the chips are not actually getting to China. And like he's being honest about that. And if an investigation finds that the chips are getting to China, that goes to Gene Munster's point, which is that the export controls will get tighter. Then maybe they have to go through checks when they go to Singapore, which is how it's getting to China. And then that could reduce revenue. So it results in uncertainty, essentially, is the kind of core thing there. I guess we're going to see how this plays out. But if anyone's confused why NVIDIA is down, I think that's the answer. Uncertainty around export controls along with Mag 7 weakness is what's happening here. Even with all of that, I do not think this thing deserves to go back to 120. But if they want to give it to us, I think based on this quarter, that would be a dip that I get excited for. But we got to see if that happens. Also, it's the last 2 days of February. Maybe in March, everything is beautiful again, and we're done with all this pain in February. I say this hyperbolically because like people are still up a lot over the past couple of years. I mean, if you bought NVIDIA on August 5th, if you bought NVIDIA this time last year, it was $50. Like it's hard to keep getting impatient. But a lot of people like myself bought it, not at 50, bought it at 125. So obviously from that perspective, and given how stagnant it's been, people want to see it move up. But if you've been in the markets for a while and any of these amazing names, even in Google, which was at $80, $85 a year and a half ago, you've done very well regardless of the short-term volatility to the downside. Is Palantir still green? Are we green at all? Palantir, yeah, barely green, 89.72, but we are indeed a little green right here. All right, cool. So I think that's it for today. I want to play one more clip from what I saw yesterday. It has to do with Robinhood. Vlad was on Jason Calacanis's podcast, and he said something really interesting. It's about a 3-minute clip about investing in startups via Robinhood. I know yesterday we heard the headline that people want to invest in real estate via Robinhood. If you could do it via startups, that would also be really cool. And I think later this year, they're getting ready to announce some really, really interesting stuff. The question is just going to be, when these things come to fruition. But he was on that podcast. If anyone wants to watch the whole thing, I'll put it in the description. We'll take a listen to this, and then we'll do word of the day, and then we'll be out of here for today.
Oh, yeah. And I think it's interesting. So the retail angle is obvious for me. Why is it interesting on the other side for the startups and companies? So I think for late stage companies, it's useful because the employees want the liquidity. Some of them have been around for a long time. The employees are actually motivated to sell some of their stock and take some chips off the table.
Do that, as programmatically already. SpaceX, I think, does it twice a year. Stripe does it once a year. And they have a very orderly process to, let people cash in some chips. And I think they even do it on a certain percentage. So if retail wanted them, and there's like some Destiny ETF or something that got popular because it owned some SpaceX. And I had the founder on here. I don't think they even it might have been their largest holding because of the valuation, but it's not like they, at the time, I don't think they had a very cheap price on SpaceX. They had bought it, at a very high price. And people want it so bad that they found a way because consumers are smart, like you're saying.
The ETF ran up, right? The ETF ran up. That showed you some of the demand.
That showed demand. Yeah. Not logic, but demand.
So I do think like later stage post-IPO founders and management teams of startups aren't super motivated to do it because in a sense, you start competing with the startup itself for primary capital. So I think the employees at that stage are kind of the stronger pull for the other side of the market. On earlier stage, the entrepreneurs would love to have that product. I remember when I started Robinhood, we had a hard time raising capital. I mean, you were an early backer, but we didn't have that many believers in the early days. And you could get Robinhood stock. You could invest in Robinhood on AngelList at a 10 million valuation cap.
Crazy.
And we pitched so many individual investors who were just, normal people who.
This is why startups are exciting. You could invest in Robinhood at 10 million in 2015. Today it's worth 50 billion. Like those types of returns are just only possible when you get in early on these names.
Worked the job, built up a nest egg, retired. They live in the Midwest, and we pitched them just like we pitched every VC. And everyone who was interested, we gave them their allocation because we had to take what we can get in those days. So
you're passing the cup around, just trying to make enough to get the company off the ground. Yeah, and we had I think Thumbtack was 5 million. Uber was 5 million, and Superhuman might have been 10. Yeah. So yeah.
Yeah. And, I imagine if we had an easier way to, you just tap a button, you get access to global liquidity, and, retail gets access with appropriate guardrails and disclosure to early stage opportunities. As an early stage entrepreneur, getting my venture off the ground, looking for capital, that would be a great product offering.
I am super excited about it. My best piece of advice to the SEC, I've made it clear to a bunch of my friends over there, create an accreditation test.
Yeah.
And I use the example, when you go into Robinhood, if you don't understand options and puts and these, more elaborate devices, not just buying and selling a share, but shorting it and doing options trading, you do such an amazing job walking people through an education. Now, you don't have to do that, but you do it. What if in the United States, just like you have to have a license to be a barber, or a license to own a gun, or a license to be a teacher, or even drive a car, and these tests are different.
Yeah.
We should just have, and the SEC has been mandated this, they've just kind of slow rolled it and they're slow walking it, just a 3 or 4 hour course on private company investing and, interesting nuances to that, diversification and preferred shares versus common shares, all that stuff. And you just take a 50 question test. The test could be $25. You could have the test in Robinhood. You could have it at the SEC's website. You could do it any number of ways. And you have to take a course that would be free online, or you could take it in person for $100. Man, this would be so perfect, wouldn't it?
My take on that is I think it would be odd if the friction to investing in a company like SpaceX, for example, is significantly higher than investing in a meme coin. It's like you have to pay, you have to take an accredited.
That is a good point, right? Like if you have to take a test to invest in SpaceX, but you could buy the Trump meme coin, which is down 80% just for like being a user of the product. There is a bit of a nuance there that probably it should be easier to buy stock in SpaceX instead.
Foundation test.
Yes.
Because SpaceX is risky and you have to know what you're doing, but
I would like to have it for both. Like I'm talking like, man, when I took a firearm test in California, it was like, what's the best way to hold a loaded gun? And it was like, point it in the air, point it at the ground, point it straight in front of you, or have it in the holster or on the lockbox. And it was like, it was like the silliest test ever.
Yeah. I think there's a lot of solutions, and I think we're excited to be kind of deeper in that discussion. I think that platforms can do a lot here to put private companies in different tiers. For example, some companies have audited financials that are public company quality, and those should be in a high tier where they provide a lot of disclosure. And then some don't do anything, and maybe you put like a skull and crossbones and big warnings and say this is like incredibly risky. Kind of
and then
like
you'd have meme coins under it.
Right. I mean, it's kind of like you have pink sheets and penny stocks right now that really don't have the same type of reporting requirements. So, yeah, I'm more in the favor of like self-certification.
I think that's a fair point, dude. I think if there's a world where Robinhood allows you to invest in Discord, SpaceX, Stripe, etc., before they become public, retail would essentially be liquidity for the employee shares, which is at least it's better than getting in via IPO, right? So like even though you're paying a premium before the startup goes public, and theoretically when they go public, you should get like hopefully at least 20% to a double based on the time from the secondary shares to going public. And then they can show you the most riskiest startups that barely have any revenue, that you're literally just taking a gamble on, or something like SpaceX, which basically is a public company, but it's not public yet. And if you fill out some disclosures, you should be able to get allocation into SpaceX shares. So I think it makes a lot of sense. And if Robinhood becomes the center of not only stocks, not only crypto, but now private investments, could you imagine retail day trading private secondary shares of SpaceX? Like it would just be such a liquid market. It would give access to so many people that don't have access to, maybe you're not getting in the Series A, but if you're getting in the Series D before they go public, and usually they would tend to go public a couple of years after Series D, you would still get a higher valuation. I mean, like it is an amazing idea. And Robinhood collects a small little fee along every one of those purchases. Like the fact that he's even, this is what I'm saying. Like whenever I think of a fintech now, my bar to invest in a fintech is so high because I look at what Vlad's thinking about. I look at how he's thinking of taking a brokerage product and turning it into this entire integrated financial services ecosystem. And I'm like, oh, like what other fintech is actually thinking the way he's thinking and actually has the vision to then get the talent to put something out there, and has proven that he can execute, i.e. with the president election contracts. The fact that they did that in 2 weeks, there's just so many different opportunities and industries and niches and ways they can diversify. And that's why I think even though Robinhood is very cyclical with the market, they will one day not be cyclical. And it might take 5 years to get there, but that is why buying the dip on it becomes very exciting. So that's what we got from Hood yesterday. If you guys want to listen to the full podcast, I'll put it right here in the chat. Vlad had some good moments on that pod, so you guys can watch it right here below. All right, cool. I think that is it for day. Nasty market, not really giving us any love. Nvidia still down 126. Robinhood trying to get back to 52. Palantir 89.72. Tesla is red 288. Grab 495. Trying to get to $5, which would be very nice to see, but we'll see by the end of the day if that can happen. Nvidia 126. McDonald's is green, so you got some defensives that are green. SMCI just been horrible today, down 10%. S&P just went red, but it's basically flat on the day, down 0.05%. In terms of the market recap video, so a lot of you guys messaged me about it yesterday. Of course, I said something that's going to cause new problems and more work in my life, but now people are legit asking for it. So I guess we're just going to keep putting on more things on the plate. But yeah, next Monday looks like we're going to do a official market recap every single day, about 15 to 20 minutes. We'll see how it goes. We'll see if it's worthwhile, if people like it. It'll be time-stamped. It won't be a cut-up of the market open, market close. It'll be a new video, but basically me speaking about the things that happened throughout the market open, market close, probably about 7:30 to 8 p.m. a day. Or that'll be when it's released Eastern a day. And we'll see. We'll see if I like it. We'll see if it makes sense. I think it might be the right direction to go. If we don't like it, then we'll stop. But a lot of you guys messaged me yesterday on Twitter and you said, hey, like this would save us a lot of time. It would be a good idea. Like it's something that we would actually look forward to. So we'll see. We'll see how it works and we'll put it up and go from there. Are you going to stream Rock Lab earnings? Yes, I will try to have Matt on the call with me tonight and or on the show with me. And then I think when the call starts, he'll be streaming the call on his channel, so everyone can leave my channel and go to his channel for the call. But I think he'll be joining at 4 p.m. for the results. And yeah, hopefully we get some good results and Rock Lab goes up. It would be nice to see. The Epstein list is also releasing today. That was some piece of news. I don't know if people saw Pam Bondi, the new Attorney General. She said that it's releasing today. So that'll also be some pretty breaking news. Maybe that happens during market close, but the Epstein list, according to her, officially is releasing today. And so that'll be another thing to dive into. Artemis says, bro, my GF already calls me gay for watching you all day. Now more. Well, now she's now you are going to get even gayer. But gay means happy, so that's actually okay, right? You're going to be happier watching me. All right. Word of the day is spin drift.
Spin drift.
Thank God I didn't say that one wrong. Spray swept up by wind along the surface of the sea. Each wave sent a cloud of spin drift up. Spin drift sprayed onto their coats as they walked along the shore. Okay, this is a stupid word. Let's get a better word. This is dumb. Let's do vocabulary.com. What do they have? Okay. Exigency. I think I've seen this word. Exigency.
Exigency.
Yo, why does she sound like that, bro? Some of these voice people that they have. What do you call a voice person? Voice actor? Or is this just AI? Like night and day difference, bro. Like she's trying to seduce me with this word. And the other one just like says the word.
Exigency.
Exigency. Think of a mix of excitement and emergency. You have an exigency, a sudden urgent crisis. The very word conjures up danger and intrigue that demand a cool head and immediate effort at a solution. Okay, so I guess this market is giving us some exigency because it's a mix of excitement and emergency. Emergency because everything's tanking. Excitement because maybe we're buying the dip because everything's tanking. But a little bit of a description of where the current market is right now. Have you tried Grok Voice? I haven't, but Grok has a not safe for work option on their thing. Elon was tweeting about it. So, I mean, this whole world of like AI relationships, like that's going to become a thing, bro. And ChatGPT hasn't done it. Anthropic hasn't done it. Perplexity hasn't done it. Gemini hasn't done it. Grok is the first LLM to like have a NSFW mode where who knows what the hell's going to happen with that. So, it's happening. It is definitely happening right now. All right, cool. That's it for me. We'll be back on the market close. We'll get Steve on, get his thoughts. We'll get money market inflows as well today on the close. And then in terms of earnings, we have Dell, SoundHound, Duolingo, Monster, TMDX, Archer, SMR, nuclear company, Redfin, real estate, D-Local, and then obviously Rocket Lab. So that'll be a big one today after the bell. All right, cool stuff. Thank you, everybody. Appreciate you all. I will see you guys on the market close. And we've got Rocket Lab. That'll be a big one. And we'll see what happens today later after the bell. Bye, everyone. Have a good one. See you guys in a bit.